Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you. 2 Corinthians chapter 1, verses 3 to 4. Blessed be the God and Father of our Lord Jesus Christ, the Father of mercies and God of all comfort, who comforts us in all our affliction, so that we may be able to comfort those who are in any affliction with the comfort with which we ourselves are comforted by God. Psalm chapter 23, verse 4. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me.
Good morning, everybody. Welcome. Hope you guys have had a good weekend so far. A whole lot has happened, that is for sure. What's up, Tony? What's up, Fritz? Sufi? Alright, so yeah, let's get started, shall we? So, we have CPI next week. That should be fairly interesting. So yeah, CPI, FOMC, Fed speeches, president speeches, rate announcements for the interest rates. These are all like NFP, FOMC, Fed speeches, CPI, president speeches. So all those specific news events, when they're present, we want to make sure we're aware of those, because there's protocols in terms of risk that we have to utilize. Just a reminder, right? NFP, FOMC, generally those are two-stage news events, meaning if FOMC or NFP comes out at 5:30, or maybe it comes out at 6:30, maybe there's a news event before that, or even if it's just, those news events by themselves, which generally isn't the case, but let's say it is. They're both two-stage news events. So that means the first move within the first 30 minutes of the delivery, during the announcement, right? 30 minutes after generally is the fake move, right? Like that'll be a run on stops of some kind, right? If we're bearish, the NFP announcement or FOMC announcement, if we're bearish, may go higher first, sweep buy side, trigger in stops above us, and then obviously drop and destroy people to the downside if we're bearish. And then vice versa if we're bullish. You want to study this phenomenon, the characteristics that these news events show us, because it's very obvious. Like you see it, if you keep this in mind and you go in and you watch the announcements and how things deliver, it's very, very obvious, right? That's what takes place. So keep that in mind. And then CPI specifically, given that that's coming this week, which is Consumer Price Index, basically determines or shows us data as far as whether consumers are confident or not. But aside from the technical back-end piece of information related to that, CPI, opposed to the NFP and FOMC delivery, is generally one direction, right? Like if it's going to run higher, it's going to go higher and most likely not even come back at all. Maybe it does come back, retraces all the way, but then continues to go in that intended higher time frame direction, right? So remember another thing too, before we move on to the other stuff, when there's no news, you want to classify that as high resistance. Expect it. That doesn't mean that it's going to always be high resistance, but there's no news event for institutional sponsorship, so a lot of times they'll use it, especially if we're ahead of a news event like this or FOMC or any of the others on the list. A lot of times It'll set up liquidity and build in sentiment, so then they can take advantage of it when these news events come out. Okay, so keep that in mind. What else about that? Yeah, CPI is generally a one-stage news event, like I said. So, it'll just aggressively run towards a particular direction. Sometimes it has deep retracements, but again, for the most part, it's very one-sided. So what does that mean, right? Well, because this news event is happening this week, we want to make sure we're lowering our risk, because that's the protocol for these types of news events. And the first 2 days of the week have no news. You should expect harder to trade conditions. Also, another thing to add on in terms of situational awareness and sentiment awareness, we've had one-sided, very crazy downside delivery, right? We came off of a 3,000 plus point drop in the NASDAQ. So it's been very one-sided. So large ranges lead to small ranges, and small ranges lead to large ranges. So given the things that I just laid out, and the simple fact that last week was dramatic, one-sided going into Saturday, large ranges lead to small ranges, right? So then you add all these other things we just talked about. Expect harder to trade conditions. Okay, it's obviously not the sexiest thing for us to talk about this type of stuff. But again, if you want to be a professional, this is part of it. You have to understand the conditions, because say you go and try to get a funded account, and these are the things that are ahead of us, and you go into the next week excited, right? Super ambitious, and I'm going to get all these goals accomplished and all this blah, blah, blah. Well, if you go in to a scenario like this with that mindset, and you're not allowing yourself to manage those expectations, don't be surprised if you blow your account. Don't be surprised if you go on a massive losing streak, because ambition sometimes overrides reality. And these are the reality-based things, right? The conditional reality-based awareness, right, to what is currently in front of us. And we have to keep this stuff in mind. This is what experience teaches you. When we're very new in our trading, we don't have this experience to lean on, what to expect in terms of what's happening, right? Aside from technicals and stuff like that. Okay, so this is something you're being able to borrow, right? Like I'm letting you borrow this perspective, because over the last 5-6 years, this is what I've seen. Not only that, ICT talks about this specific situation ad nauseum, like continuously. Yet people go into their learning with these preconceived notions, thinking about order blocks or fair value gaps, and anything that's mentioned outside of that, they discount it and they don't pay attention to it. And then, come to find out, they should have listened, right? Because and normally they learn that through blowing their accounts and unnecessary pain. So just keep this stuff in mind. Obviously, again, as I always say, this isn't meant to make you fearful. It's not meant to make you doubt yourself going into the week. But it is meant to help you calibrate your risk protocols, because not every single moment in the market is a time where you go in with your normal risk. It's part of being a risk manager. That's what we are at the end of the day. Traders and banks, they're not called traders. They're called risk managers or portfolio managers or money managers, right? It's not a trader, right? Although it is a trader. You know what I mean? So keep that in mind. And then, of course, keep in mind all these things that we talked about in here, and what to expect, right? We've had a huge downside delivery. We ended on a large range day, large range week also. So small ranges lead to large ranges in the daily chart, weekly chart, and monthly chart. So if on the weekly chart we had a large range candle, and then you go down to the daily, and that supports that as well, next week may somewhat be a small range. That doesn't mean there won't be a strong response from CPI, right? But it's another thing you want to keep in mind, just in case that is something that we see in price. So you can anticipate it. If it's showing signs that it wants to not really do much, if it wants to consolidate, if that does take place and you were told this information and you take it to heart and you look out for this stuff, you'll see quickly that, this stuff is extremely helpful in terms of anticipatory skills. Anticipatory skills, your ability to expect and anticipate a move, that's what takes so long in trading, right? Technicals, ICT has mentioned, you could learn them in like a year or two. But the expectation, the muscle memory in terms of what price does on a regular basis, what repeats, that takes experience. Just like how studying a subject in some type of college or something takes repetition and constant study, so you get familiar with the content, the concepts, right? Or lessons, or whatever you want to call it, right? It's no different when it comes to trading. It's pattern recognition, because we're not like robots, so we can't just like magically have photographic memory and see every expectation or performance in the marketplace, because signatures are very similar, but they look a little different every time. They don't look exactly the same. There's always little nuanced differences, but the overall concept itself, as you become familiar with things, it's much easier to anticipate and expect certain things to take place, especially if you consider the characteristic ideas that I just mentioned to you in terms of CPI, FOMC, NFP, so on and so forth. And what happens after large ranges, what happens after small ranges. How does one lead to the other? And then the delivery mixed in between, what takes place in that regard. Okay, so with that being said, again, our expectation is going to be low for the week in general. Again, doesn't mean you're fearful. Doesn't mean you have these thoughts of not being able to participate. But it does mean you have to calibrate your risk properly. That means going into the week, you're cutting your risk in some capacity. I recommend you cut it in half. If you risk 1%, risk 0.5% all week. For every trade, unless you take a loss, then you drop it down to 0.25%, right? So one notch lower than the risk you're allowing. You could do 0.75%, right? If you're trading 1%, right, just drop it down one notch. If you feel confident that that's something you can tolerate. And again, if you lose 2 days in a row, you stop for the week. What's the purpose, right? In pushing when you know the things that I just laid out for you. It's not my opinion. This is also something ICT has taught. So I'm just kind of reiterating and re-highlighting a lot of the things that people like to ignore because it's not an entry. It's not an order block. It's not a fair value gap, whatever, right? What we're talking about here in a lot of cases is more important than an entry, because if you try to take entries and these things are disregarded, that's like running into the battlefield not caring that bullets are flying towards you. I mean, you wouldn't do that, right? Because the risk is higher. So you probably want to find cover and navigate a lot more paranoid. You don't want to be paranoid as a trader, but you want to be more careful, and adding these rules and being aware of these things helps you do that. Okay. Just wanted to put a little bit of housekeeping out there and talk about some stuff related to the current condition. Right. So now, as always, right, going to the bonds and yields. I mentioned this before. Although we like to look at the markets as a whole, and we want to be able to have confluences across different markets relating to the asset we're trading, for example, the bonds and yields, currencies and DXY versus the indices, so we can come to a determination as far as what should or shouldn't take place in a more high probability fashion. Just because that's the case doesn't mean that you have to only take trades when things are in alignment, because things will be out of alignment, right? At certain times, like right now, things have not been fully correlated. That just tells you you're in a high risk environment, a more elevated risk. Then you take that observation and you go observe what's happening in the world. And I mean, it just makes sense why things are sporadic, why things are not correlated really, at least in terms of the indices. The currencies like Euro and GBP, those are fully correlated. We've had, GBP and Euro rallying, right? At this, obviously they rallied and they've hit a higher time frame PD array. And now they're kind of declining a bit. reaching for a very logical level we've talked about ahead of time, right? Fair value gap. I mean, even these are kind of cracked in correlation. Look, right? You see huge candle wick to the buy side and closing on a sell side basis, but the euro is closing at a buy side basis. So you could just see that things are cracked. And I say all this to say, I've had questions about or concerns in terms of the overall analysis process itself, because things are not at this moment fully correlated, and some stuff's not making sense, right? But it does make sense because there's so many things taking place. The market has uncertainty across the board, so things are cracked in correlation. Now, again, just to back up a little bit, does that mean you cannot take a trade or find opportunities? Absolutely not. You can go in. It's just a piece of the analysis and confirmation factors that we like to utilize are off base, right? They're kind of uncertain, and that's okay. All that means is lower your risk. And if you understand what you're doing in terms of your model, in terms of draws on liquidity and how to navigate the day-to-day price delivery, clearly those of you that have been with me in my private community and even in just the live trading here on YouTube, you've seen I'm able to pull out opportunities. Does that mean I take every opportunity? No, because given the circumstances, I'm going to be more demanding. If it does not offer what I want it to offer me, right? Like if I have an assumption it's going to go higher, but it doesn't do so, or it's just super hectic, and when I'm trying to make a decision, then I'll choose to sit out, because this isn't like a job. At a job, we show up and we expect to be paid for our time. In trading, sometimes you got to wait. You're not always guaranteed to make money when you hop on the chart. You're also not guaranteed to have even an opportunity that's viable within your model every single moment in the marketplace, just because you sat down. The market doesn't owe us anything. We're there to snipe. We're there to look for things that make sense. And when the opportunity arises, we pull the trigger with no fear, because we have rules and systems that we follow that are not based on emotion. They're based on what's taking place in the chart. And if it's there, we're going to take it. And we don't have fear also because we manage our risk properly. And we're able to submit to some of the things that I talked about today in terms of conditional awareness and how we're supposed to behave in the marketplace when certain things are at hand. Okay? So yeah, again, I say all that to say, in terms of when things are cracked in correlation, that doesn't mean that things aren't working. That doesn't mean that you should just disregard the process that's proven for, at least on this channel and do ICT's concepts over decades. They've proven efficacy. ICT has also said, when things are cracked in correlation, it's telling you something. What's it telling you? The condition is higher risk. Okay? So something's happening in the marketplace, overall, on the back end. And we can see what that is perfectly. That is the economic changes in the policies in America. Okay? So big money is adjusting. They're trying to figure out what to do. They don't know what's happening because things are uncertain. And the president is unpredictable. So they take that as a negative. And, we see that result, right? Thousands of points in decline because the market has no idea what's taking place. When, people with common sense know that cutting debt and doing all these other things to stimulate the economy and strengthen the dollar, that's good for the economy. So why are things dropping? It is it's manipulation, right? And, you'd imagine that, cutting debt and trying to be more responsible is a positive thing. But, the uncertainty aspect makes it hard for the market to know what to expect. The market is a forward-looking indicator or a forward-looking tool. So if it can't see what's up upon the horizon because there's big changes taking place, obviously it's going to spook some people. But again, in the grand scheme of things, this huge drop is totally healthy. We've been so overheated with the market that I'm not surprised that we've taken this huge fall, And the stock market is not an indicator or an indication that the economics for a country, specifically the United States, it's not an indicator telling you whether things are good or not, right? It's just showing you valuations and companies' expectations and how profitable or how good companies are, right? Like as a whole, you know, and that's the thing. If the moves that are taking place in the market, I mean, in the overall economy in the United States was such a bad thing, right? I mean, look, a lot of the things that are happening in the economy right now should be stimulating the DXY, okay? Because that's the case, and a lot of people that are smarter than me that have to do with economics, they were expecting that as well. And normally that would take place, given the fact that we're cutting debt, we're increasing a bunch of different things in terms of income for the United States, tariffs and all that. Those stimulate strength in the US dollar, right? So because there's a huge crack in correlation, just the simple observation that things are cracked in correlation is showing you there's manipulation. Things that take place in that regard, like things not following the risk on, risk off relationships, that's showing you there's manipulation. That's why it's so important to catch SMT, to understand SMT, and understand this risk on, risk off behavior, because when you're able to identify this crack in correlation, you know that we're in a heavily manipulated environment. And, you know, based on what's happening, right, cutting debt and increasing income or GDP for the United States, you know, the fact that that's a good thing for the US dollar, I mean, that in itself, aside from the overall relationships being cracked, is showing you there's manipulation. You know, they're probably trying to drive the DXY interest lower so big money can position, because the dollar's going to fly off the handle. Okay, it's going to do insane things based on what's taking place. Although it may take some time, you know, cutting debt and increasing GDP value and productivity in the country, which is the United States here, that's a positive thing, you know. And those things that are being cut and GDP increasing in terms of our income as a country, for that to be negative for the stock market, I mean, that's totally pathetic, right? I mean, in a grand scheme of things, you'd imagine that'd be a good thing. But the markets are tanking because now big companies are now thinking about how they now have to increase costs, right? They're going to have to increase the cost of production because they're not going to get $1 slave labor from these other countries. You know, so that right there, I mean, that's a disgusting fact that if we move away from that as a country and try to build things here, how that's having a negative impact on the overall economy short term. And the only reason that's taken place, at least from what I can observe, is the fact that there's uncertainty in terms of suppliers and partnerships and all these different things. So the overall market's like panicking. You know, it's thinking, oh man, what's going to happen? That uncertainty doesn't mean that the overall market's going to just go to zero. That just means that adjustments have to take place. There's going to be short-term pain. But in the grand scheme of things, because this is a long-term move that's taking place, long-term, the markets are going to most likely recover. You know, 100% they'll recover if America's going to stay America, you know, because, again, it's going to stimulate growth. It's going to stimulate income, and we're cutting debt. So our financial house is being put in order, and this should have been done a long time ago. We've been so overheated in the stock market. Even ICT's talked about this. Like, there's no reason we were so aggressively up given the overspending and all these other back-end economical things. It was just a matter of time before this took place. They stalled this in the last administration by manipulating interest rates and doing a bunch of government spending, which artificially showed that GDP was growing because we were printing money through a process called quantitative easing, which increased inflation. Now, because the new president is trying to cut inflation, inflation as a whole is actually positive for the stock market, because that means things are getting higher in terms of profits, right? Because they're inflating the assets through inflation. But that hurts the people down at the bottom that have normal jobs, that are construction workers and just normal everyday citizens. That hurts us as normal citizens because inflation. But inflation is positive for assets because it inflates the value of assets, because the dollar goes less, right? It buys less. So you have to get more of something, or assets increase in value due to simple fact that inflation just causes that in the stock market. So the rich love inflation. But when you're going to cut inflation, the rich hate it. So guess what? The markets crash because majority of the wealthy are invested in stocks. They're invested in assets, while the majority, unfortunately, is not, right? So inflation hurts the little guy, but it favors the rich. That's why a lot of the rich were not trying to deal with the new administration. Long term, they would if they were thinking long term, but they think short term because they want to make money now, quarter by quarter. But because now that's all being cut and destroyed, and so the little guy can succeed, and long term the country as a whole can succeed. Short term, you see this extreme decline, right? So I just wanted to kind of mention these things to make sense of what's taking place, because majority of people they just think that, oh, he came in, so now everything's bad just because him as Trump, the person, is bad for this or bad for that, when that's totally ridiculous. That's an emotional, nonsensical argument. Because if you actually dig in and do homework on what's taking place, what those moves are going to cause long term for the U.S. economy and for companies as a whole, they're positive. But because this has been kicked down the road, every politician's been kicking the can down the road for the U.S. economy. This is what has to take place now because of the result of kicking the can down the road for so many decades and getting us into debt and all this nonsense, right? So, I know I've been getting a lot of questions as far as like why these things are happening and all that. And, I'm not like an expert on economics, but from a basic level, from like kind of how I explain ICT concepts, like I try to simplify it from a more simplified level. This is what's taking place, without getting too caught in the weeds and stuff about economic policy and, all these different things, So I hope that made sense. And I hope that brings some ease to some of you guys that have been asking me these questions about the overall market and just like in a state of panic, right? If anything, you should look at this, if you're a long-term investor, as a wonderful opportunity, because now every asset is at a discount. Everything is at a discount. You wouldn't go into a store and see the red sale tag through a lens of fear. So why in the world, if you believe in the American economy, why would you see red as a negative if you know that things are going to eventually rebound because America's America, right? And it should, if people do things properly, be around and prosper for, generations to come. That's my assumption. Maybe that's because I'm biased, I'm an American. But I mean, history shows us, we lead in a lot of things. So I'm assuming that we'll be here for the long term. And we have some of the best companies. A lot of the best of those companies are involved in the asset we trade. So again, it's not anything to fear, but this hopefully made sense of the chaotic stuff that's taking place. All these other people kick the can down the road. Trump's not allowing anything to be kicked down the road because he can't run again. So he's running for legacy. And we got to appreciate that because he's helping our kids. These are long-term goals versus long-term moves and adjustments that help us stay prosperous for long-term, keep the market solvent long-term, versus kicking the can down the road, thinking quarter by quarter and from a lens of needing to be reelected. So he doesn't want to upset nobody. He doesn't care, thankfully. We've needed this for so long. And because we were down a really bad path, 36 trillion in debt, and the markets need this, right? We need these moves if we want to be able to trade this asset. Because if America goes down, the asset goes down, and trading as we know it, at least within the American opportunity, the American markets, disappears. And there's a reason people trade these. There's a reason there's CFDs for other countries to participate in the U.S. markets, because it's the best market. It's got the most opportunity. It's just the best. So we don't want to lose that. So we got to be grateful about what's taking place, even though there's short-term pain. Yes, there may be increases in prices. Yes, there may be this or maybe that. But if, taxes can be cut, that's good for us, right? And it's good for the market. It's positive. And if we could just make these adjustments now, we won't have to make them later. and we'll have the opportunity to engage in these markets for generations to come, which is job security for us as traders in this market. So it's a positive thing. And again, long-term investors, same financial advice, obviously. Oh yeah, let me pull this up real quick. Right, it's not financial advice. The disclaimer, read it. But yeah, right, these are just some opinions and things that are, based on what I understand and what a lot of smart people in economics are talking about, without having a political lens to it. These are positive things, and this is basically why. And again, inflation is good for the rich. It's good for the stock market. That's why things have been raging, overheated, and just ridiculously rampaging to the buy side nonstop. It's because inflation, when it's present, although it hurts the little guy that doesn't invest, it's positive for assets because it's asset inflation. Inflation inflates assets, right? But it hurts the little guy that doesn't invest, who doesn't have this financial understanding or understand the economy and how things actually work. So now you guys understand like the main points, and just know that long term this is good. So think about learning how to long term invest. If you do long term invest and you're in America, right, or any other market, the same thing applies to other countries, Canada, any other country, Australia, any economic policy or economic structure that's based or similar to the U.S. economy. Inflation's good for assets because it inflates the value, but it hurts a little guy. Cutting inflation is short-term bad for the overall stock market because it's cutting inflation, so the asset inflation drops, but it's way better for the little guy, so the little guy can stretch his money longer. You know what I mean? So yeah, with that being said, I just wanted to lay that out too, because most people don't know that. And I'm getting so many panicky questions about what's taking place. And just relax, right? Just relax. Nothing's going to end. It's all going to stay the same. And this is good for longevity for us as traders that trade these markets. So, don't set your hair on fire. Take politics out of it and look at it from the information that I just mentioned, and go research some of the things that I just talked about, and you'll see very clearly with a simple Google search that this is in fact the facts. Stay away from political nonsense and just look at things from an actual fact-based perspective, and this is reality. Although people are setting their freaking hair on fire, but that's human beings, right? They'll just do that regardless. But yeah, so we got the bonds rallying. So this, obviously, we've been talking about this going higher. Again, there's been a crack between the indices and the bonds. They're supposed to be following, but the foreign currencies have been following in order, right? They've been just going higher. We'll see what happens here. We basically hit a very large time frame PD array, right? The down candle here, that's a breaker. So, and a fair value gap. So obviously that is an opposing PD array to price rallying. So as a result, right, that triggered in a retracement. What is it retracing to? Right, we've taken external range liquidity, rallied aggressively, and now we've hit an opposing PD array that triggered a reversal. What's it reaching for? Internal range liquidity now. So again, we have a balanced price range here with this overlapping fair value gap here and here. So as long as we stay above this midpoint, like we talked about for the last 2 weeks, this should be able to remain going higher, right? If it violates that, then obviously things may be changing. We may start to see a decline further, but that would initially mean that, again, going back to what I said earlier, the things that are taking place should be positive for the US dollar overall because it's stimulating use of the US dollar. It's backing up the strength of the US dollar by increasing productivity and use for the US dollar in terms of commerce. So it should be able to positively, on the back end fundamentally be positive for the US dollar. That is negative for foreign currencies. So if we violate this, right, and it just starts smashing lower through these levels, that's going to justify the things that we've just been talking about in terms of actual economic understanding, merging that with technicals, us hitting this opposing PD array, and the possibly anticipating DXY rebounding here. I'm not going to commit to DXY rebounding until obviously we show a little bit more commitment, because we have this cracking correlation going on, and we may not be done. I was talking about this as a potential market maker sell model, so I still believe that has a chance to fulfill. We'll see what happens in here. There's a monthly fair value gap in here. Prices now did an immediate rebalance, right? Hitting that. We're at a weekly bearish order block as well. So it's filling in both sides of this monthly fair value gap. So if we were to decline and get through that, I am 100% committed to the fact that will end up leading us to the lows down here. We may dance around and try to play inside this area a little bit more, but we'll obviously see what happens. But this here, if it delivers outside of this fair value gap, that's going to act as another balanced price range. So that should support the narrative for us to go lower and aim for these equal lows down here, which we've had our eyes on for a while. Because price didn't break through this overall high here and the balanced price range I talked about, clearly that ended up declining. I said the only way that we will end up being bullish longer term for the DXY is if this high was to be violated. If you go back and look at the video I talked about this in last week, you'll see, or even like the week before. So the last 2 weeks I've been mentioning this high as my line in the sand, right? And if we would have got above that and broke through this balanced price range, buy side would end up being in the cards, right? We would adjust from DXY dropping to DXY being bullish in that regard, because that violates 3 PD arrays. That breaks market structure versus just being this run on stops, hitting this fair value gap to end balanced price range to decline. But since that held up, right, we see that it just continued with the cracking correlation with DXY dropping and the indices dropping as well. So yeah, I hope that makes sense. So again, moving forward with the DXY, if we see price can get down below the midpoint of this and then initially break outside of this monthly fair value gap, more long term, right, we're going to end up targeting this. But of course, if we close outside of this and violate the midpoint of this weekly bearish order block, then again, we have the opportunity to potentially adjust from bearish to bullish in the DXY. And again, that would support my assumption for the economy, right? And these moves being positive for the US dollar. That'll turn this into just a huge manipulation, because they know that this is positive stuff. Like the smart people that know what's going on for the economy and how things actually operate on the back end, they know that the things that are happening are positive for us long term for the US dollar. Okay? So if that violates these upper levels here in the near term, that's going to support that idea and prove efficacy to that understanding, even though it's kind of simplified. Okay? We just have to know what impacts what, and how that should be used in the market. That'll prove if we violate these upper levels and get up above here, that'll prove that all this was manipulation from those that are in the know as far as the impacts of the economic adjustments taking place, right? So yeah, if this stuff makes sense and you guys get value from the overall content I provide here, definitely don't forget to like the video, subscribe if you haven't already, and share this with your friends so people that can also come and get the value and add to the conversation. It's much appreciated. I appreciate you guys that hop on faithfully. You guys are the reason that I even do this live, because I could just be in my private community, as they all well know, But if you support me, I support you. So appreciate you guys, and spread the word, right? But yeah, so hopefully this stuff makes sense. If you guys got questions, let me know in the chat right now before we move on. We're gonna switch back to the bonds here and continue this conversation. So yeah, we've taken out buy side here. Clearly there's potential relative equal highs up here. It does seem like there's no real reason, unless this swing low is violated, for us to think that the bonds are going to start declining. Okay, let me see. Appreciate you and your education is life-changing. I appreciate you saying that, Tony. You've been here since I really started, really ramping up my ability to go live on YouTube, or my interest to go live on YouTube. So I appreciate your support, brother. On DXY, could the fib up to 62% retracement level be applicable? We'll check that out right now. I'm starting my 50K challenge this week, and I'm going to do well. Complete different this round. Yeah, for sure. Just remember, Tony, don't overtrade and over leverage. Take things slow, depending on what company you're going through. If there's an unlimited time limit, do not feel rushed. That's where they get you, right? That's why it's changing in terms of, how, like, the time limit that each company's offering. Unlimited time is much more reasonable than 30 days. 30 days, I mean, that's just telling you got to hurry up and get 10%. Not many people are able to make 10% in a year, let alone in a month, right? So keep that in mind, right? If it's unlimited time frame, take the time, right? Only take opportunities that make sense. And, take your model. Don't do anything outside of it. Practice discipline. That's one thing that I favor with funded accounts is they force you to be disciplined. More disciplined than most people will ever be. They make it hard, right? They make it such a difficult discipline aspect. For one, it's good because most people will blow their account, and most people can't control themselves. Most people don't understand what's going on. So they'll just get in there with this big hope and dream that, they're going to get this huge account, when in reality, you got to manage risk even more solidly than you would if you were in a personal account. But the principles of risk management, even though they're a little bit unreasonable, which ICT also agrees with, it should be, a little bit more lenient. But even though they're a bit unreasonable, obviously there's still opportunity, especially if we don't have a lot of money to put into an account. It's a great opportunity. I have a funded account and a personal account. My personal account was funded through my ability to crush it in funded accounts. So, it's worthwhile, and I will not dump on funded accounts too much. But I do wish that when I was newer, I wish I would have just saved my money versus spending thousands of dollars trying to get the highest, largest funded account, thinking that was a solution to all my problems. Me studying and focusing on what truly matters, that's what changed everything. Not the fact that we have access to a funded account, right? Because it'll show you whether you're disciplined, whether you have a process that's accurate and at a level where you can be profitable. It'll prove it to you fairly quickly, so because it's harder than normal and it demands more discipline. But look at things from that perspective. Look at funded accounts as a forced ability to have your discipline in place, because if you don't, you're going to be screwed over, okay? And you don't want to deal with that if you're not prepared. If you feel you're prepared, by all means, you got to make your own decisions. But just keep in mind, if you have an unlimited time frame, take your time, okay? Do not allow yourself to overtrade. Overtrading and over-leveraging are the two assassins in the marketplace that destroy dreams. It crushes people. And all we got to simply do is just accept that we'll lose at times and come back tomorrow. If we lose a good amount in a week, come back the next week, reevaluate. There's no use in being in a state of panic trying to go in and fix drawdown in a couple days. Give yourself, if you go into drawdown, give yourself a week to bounce back. Every trade you get into, if you're in drawdown, should be cut. Your risk should be cut. It takes longer to build it up, but if you're consistent, there shouldn't be a problem. That's an argument and a thought process most people don't like to talk about. They don't want to focus on that because it forces accountability. It forces a realistic observation in terms of where we're currently at. Because the market, it's not going to sugarcoat. So why would I as a mentor? Many do because they want to sell stuff, but it's annoying, right? Because I was a victim to that type of stupid behavior and manipulative way of doing things. And it's unfortunate because it makes, people that actually want to help, like myself, who are sincere, it makes it hard for people to trust us because of dumbasses like that talk about stupid stuff and give you the improper knowledge. Okay. I did one in Tony said I did one in January and assessed the limit, but got bored. See, boredom is not something you want to fall victim to. You have a set place to trade, set session, set amount of rules, set limitations, and expectations for what you're trying to accomplish per day. And boredom is not a reason to get in. You want to be bored. You want to accept that and be happy that you get in and you are bored. Because trading on its face is boring. Okay. I love it. I'm passionate about it. I find excitement looking at the candles and trying to determine where it goes and seeing it play out. I get excitement by that. Even when I was blowing my accounts, I was still excited. I knew someone else was making money, so eventually I'll have to figure it out and make that back. And thankfully, I've been able to do that times multiples, so, and I'm bored a lot of the times, but that doesn't mean I don't like the boredom. It's a weird relationship, right? I'll be bored, but I'll be still enjoying myself. But because I'm bored, I know that, okay, I understand that my risk is going to be good because I'm not anticipating too high of an expectation, and I'm not like demanding things. I know that if I'm bored and I'm like specifically able to just relax while being bored, not really stressed out about anything, that's a beautiful place to be. So you want to, being bored is normal because trading on its face is boring. That's why, a lot of people won't do it. They can't stare at charts all day because their attention's too low, or they want to get the thrill of like being a gambler or something. But yeah, you should be bored at times. But again, you got to make sure your risk is stopping you. Your process is so solidified that it stops you from taking anything you shouldn't. That's why you got to have your plans written down, very well organized, and submit to it. No going out of it, breaking the rules at all until you reach your goals. And then, of course, sometimes you'll be able to bend the rules a little bit. But yeah, guys, there's 8 people on the live so far, and only 2 of you guys have liked the video. Definitely go do that if you guys can. It's greatly appreciated, and it definitely helps the channel. And shows you guys appreciate what it is that we do here. And again, I greatly appreciate the support and time you spend with me. But yeah, if you could go do that for me, it's much appreciated because it helps me get in front of others so I can help them as well. Right? So you're helping me help others by liking the video and sharing it. So yeah, thank you guys so much. I appreciate it. So Tony said he made a deposit in his personal account. Beautiful. You do want to have multiple accounts. Doesn't mean you obviously take losses, take a losing day in one, and then you go and switch over to the other one after you've already taken a bunch of trades. That kind of breaks the rules. If you're gonna have like two or three trades a day, maybe you can do one or focus on one day, focus on the other one the other day. But you don't want to have 2 accounts, take a couple losses in one, and then feel that, I'm just gonna reset and go to the other account, because you're going into the other account with the same damage that was just taken in the other account. So it kind of doubles the risk if we're looking at it from a logical perspective. You made a deposit there, cool. My advice for the fact that you did deposit into a personal account, definitely use that as kind of like a savings. Well, you don't want to put everything that you own into a trading account until obviously you know for sure that you're not going to blow your account and stuff like that. Put reasonable amounts. Not financial advice. I'm not a financial advisor, but that's just my opinion. Definitely build your nest egg over time and use your funded account to fund your personal account. It's like a long-term investment portfolio. Futures and Forex. Sufi said, as long as you know what you want to see. Yeah. Me and Sufi actually had a conversation about this morning. He's in my private community, and we were talking about this perspective surrounding funded accounts and stuff. So yeah. Thanks, bro. That's my passion and dream. Hell yeah, Tony. You're the type of student that I want here. You, Sufi, and many of you guys that show up on a regular basis. You guys are the exact people that I want hanging out with me. Because we don't play games. You know what I mean? But yeah, so scrolling back to here. So yeah, we've taken buy side. We are at a inversion fair value gap in here. We're also inside of a monthly fair value gap. If you zoom out for the bonds, the 30-year bonds. Okay, so we're staying below the midpoint of that. We did create this bullish order block from this monthly high. So we will actually mark that as well. That could be part of our line in the sand. We want to see how that monthly overall order block will hold. And then again, similar to what we were talking about earlier in the other price action, in terms of balanced price ranges and whatnot, we want to see what's going to take place here. If it was to run through with a large range overlapping this candle here, this fair value gap, that upper portion of that monthly fair value gap should act as a balanced price range. And we should not see, if price gets above the midpoint here and blows this out, we should not see price turn around here unless, of course, it's going to turn around entirely. Because it should now, we have a fair value gap and an order block. So if it was to run above that, this order block acts as a balanced price range itself, so the midpoint of that should be respected, which it has since it got above. Now, if we're to get up above this fair value gap here, that should act as another balanced price range, and we should have enough context on the back end to support us running through at least some of these areas here in the wick. Maybe this high here of this monthly candle, that could be a target as well. But then, of course, this high as an extreme if we are going to continue to see this run higher. But obviously, that's a long-term view, just something we want to lay out because we're on the monthly. But we'll keep that in mind. Note that in your notebook or in your Discord or journal or wherever you note things. You want to have a higher time frame notebook or section, intermediate, 1 hour daily type of perspective, and then of course your day-to-day logs you want to have also on a day-to-day basis so you can refer to them, so you can always be in tune with what's taking place. Again, this goes back to being organized. I talked about this the other week, and I talk about it a lot in my private community. You want to be organized. You want to have things that you're keeping your mind on. ICT has a notebook, right? He notes significant levels. Well, maybe you're not trying to use a piece of paper, but that doesn't take away from the fact that you do need to keep these things in mind if you want to continuously stay attached to what's taking place in the marketplace. Okay, so yeah, this is our monthly level here. I want to put the current monthly high. Okay, so we'll for it's like, could the two highs and lows on the T-bonds be seen as a range in which we are currently in the middle of on the monthly? Which two highs? You're talking about this one and this one? Fritz, are these two the ones you're talking about right here? January and April's low. January for this asset on the T-bones. So you said January and April's low. September 24th or September 2024. September 2024. Kind of not. Are you talking about like over here? This low and that low? We are, I mean, you could make the argument that we are in a very, very, very large consolidation here. I mean, obviously that's taking place. That's been taking place for so long. I mean, we did mention if you take the extreme high here to that low, get equilibrium, you kind of make sense of the fact that it's consolidating. What I'm talking about is more of a like, what are we going to use right now type of basis, right? Like that may have an impact. Obviously you could keep that in mind as far as the super extreme large time frame. But if we look at currently, because this is a monthly chart, we don't want to zoom we don't want to go all the way like this because none of this has any impact until we start to get up there and start proving otherwise. I mean, we're inside this range here, but what matters currently, right now at this very moment, is this high and that low, and everything in between that, right? And then, of course, to zoom in even further with what matters, even like on a more short-term basis, we want to observe this high and this low, and of course the close proximity PD arrays, bullish order block, fair value gap, this current monthly high, okay, and then this is not even important at this current moment, right? It could end up being important. Same as, you know, this is another area that's very important too. This monthly low here, this current monthly low, right? So we're in a state where prices swept liquidity. There's SMT at the lows, right? And now prices kind of is gravitating to the buy side. We have relative equal highs. We have order block up here. So this 5-year has actually done what I want to see this potentially do if it's going to continue going higher and support that. Okay, it's actually overlapped this huge fair value gap on this monthly time frame. So we got to continue to study how this is going to behave here, because this could act as a balanced price range. Okay, we got to see what takes place here. There's a high here and a lower high here, right? So we got this wick. So we want to pay attention to this upper portion here. If this is used and rejects price and we get below this, this will end up being a mitigation block. And of course, if we could set up where we've come from, right? If we end up getting below this monthly fair value gap, this upper area potentially being a mitigation block. If a response from this pushes us below this fair value gap, that will be where the downside delivery was rooted from. And this monthly fair value gap being violated, turning into a balanced price range bearish, would then justify continuing to target sell side, maybe the trend line liquidity down here. But for now, we've blown through this, gotten above this area. So unless that's proven otherwise by violating to the downside, closing below this, turning it to a downside bearish balanced price range, we're going to continue to try to find reasons to see price go higher, at least given what we see here, right? Right, so yeah. So yeah, again, I mean, you could make the argument that we could potentially go short. But because of what we have seen between the relationship between these assets, I mean, if you were just looking at the bonds itself, the 30-year, you could make that argument that, oh, we're at OTE. And again, that could be the case. We'll see. But we have SMT at the lows. We have basically both of these assets trying to close outside the 5 and the 10-year, closing outside of the fair value gap here. That could turn to an inversion. Right. So in my opinion, there's more evidence for us to not want to go to the downside. I would justify this as a potential optimal trade entry if we could violate the midpoint of this bullish order block here in the 30-year. But for now, I want to see, until proven otherwise, I want to see if we can continue to march through the fair value gap given the S&T that we see between the lows, between the 30-year, 5-year, and 10-year, and the overlapping of this fair value gap here. I want to see if that's going to continue. And then, of course, I want to see how we behave at this order block. Okay, this bullish monthly order block. Okay. If I can find it. Where the hell did it go? All right, so yeah. Between the 3 bonds, which one carries more weight? The relationship between all of them carries more weight. It's not one over the other. Each of these, the 30-year bonds, and the 10-year bonds, those are generally related to mortgages and interest rates that have to do with borrowing money. So that one isn't more important than the other. A lot more people talk about the 10-year for some reason. Lately, there's been a lot of talk about the 10-year interest rates, the 10-year bond, the 10-year yields. Not entirely sure why they've been just focusing there. Obviously, they mention all three of them, but all three of them work in tandem together because they are all based on interest rates, but they have different use cases for different things. But as a whole, they give you the state in terms of the health and overall rate for borrowing money and different things. And then, of course, that has an impact because currencies chase yield. Currencies chase these interest rate markets and, specifically the yields, right? So that's why this is important to us. If you don't want to get stuck in the weeds, the relationship is what we want. We like to focus on, and all three of them hold weight. All three of them confirm in the strongest way if they all support each other and the delivery that they decide to do. Right. So yeah, that is my view from this monthly chart. Okay, so we're going to look at this monthly bullish order block. I want to see what happens, and how we behave inside this fair value gap will determine more long-term what we're going to see in price. If we're going to go higher, I would like to see us confirm that by breaking outside of this fair value gap on this monthly chart, because then I would have a very obvious, clear target that we're going to take the buy side here. It's already somewhat starting to take place here with the S&T at the lows. So that's what we're going to continue to want to monitor. Plus, again, we have this monthly order block. So we're going to see how that also behaves. And if you take this high to that low, again, like Fritz pointed out, there is a large range that we're inside of. I have been mentioning this as well, the fact that we are inside of this huge range, and that's why it's just been back and forth. It hasn't really done much. It's just been back and forth, reverting back to the middle. So yeah, we'll see if we can finally stay above that. If we move away from this equilibrium here, given the extreme high here and extreme low, then obviously if we can get above this monthly fair value gap and push away, again, all that stuff justifies us having this as a target. Now, if we break back down below this fair value gap here and it fails, maybe the same thing happens here and we get below this, then obviously that puts us in a position to faithfully trust that buys are not going to take place. They're not of interest in this market. So then we'll start to favor shorts and then try to identify things that are down below us. Okay, so let's move on to the weekly real quick. Again, we could see that there's been a run on stops here. Right, we've came off the low, off the S&T that I just mentioned. So that obviously has been pretty reasonable in terms of delivery, right, and finding clarity to build that overall narrative. We do have relative equal highs up here, lots of them up here. Fair value gaps up there. We got this high. Before it gets there, though, what's important? How price behaves within this fair value gap. Aside from that monthly fair value gap we mentioned, there's also this weekly fair value gap, right? So in this time frame, if this can also violate that and fall in line with what we're looking at on that monthly chart, given that monthly fair value gap, that is even more evidence that our narrative to go higher is stronger, right? It's worthwhile, I should say, and more reliable, right? Everything that I teach here, right? Some people think, oh, move on to this or move on to that. All this stuff that I talk about here, all the concepts and things I'm looking for and things I talk about in terms of fair value gaps, order blocks, and situational things, it's directly applicable to how you view the indices or any other asset. Crypto, doesn't matter. It's all the same principles. It's just the circumstances may be different on this asset because we're trying to figure out what this is going to do, because this obviously supports something in the other assets we want to observe. So I hope that makes sense, you guys. That's why I spend so much time here and I don't really worry about it. I don't move quickly through these things because I'm teaching while I'm also showing you guys the impacts of this market, the yields, and how those affect the other markets and how that is helpful to us. Yields is for indices. No, so it's actually so yields are for the DXY specifically, bond yields. This That's this market, right? The government bond yield. Okay, that is only for the DXY. Okay, that is opposed to what the bonds do. The bonds support foreign currencies like GBP and Euro, USD, and then it also supports the indices. So if this goes higher, indices and foreign currencies are, if everything's healthy and going symmetrically, indices and the foreign currencies should rally if this is rallying, which there's been that crack in correlation I've mentioned with the indices because there's a lot happening. And that, again, that doesn't disregard what's taking place. It just means that, you got to wait for things to get back in alignment and just go off your technicals and go off the other relationships that are taking place. Right? So yeah, I hope that answered your question. Yeah, so it's as simple as that, right? And what you're looking for, especially as a newer trader trying to do this or incorporate this in your analysis, you're looking for the relationship, right? And what I just mentioned is what you want to try to identify. And then as you're observing these three, if you say go into new quarters or new months, you want to observe the relationship between all three, because if you can make an argument that there's going to be a big reversal in these assets, say there's like an SMT at the lows like there was here, right? Or maybe there's an SMT at the highs, right? If that is going to have an impact and possibly turn price around technically, right? If it looks like it's going to turn around, that may lead to an overall turnaround in the other assets. Because again, these markets, the interest rate markets, directly influence what the other assets like DXY, foreign currencies, and indices are going to do, right? So, for example, if you see like the T-bonds, the 30, 10-year, and 5-year have an SMT at the lows, and the indices have been falling as a result of maybe this going lower. If you see an SMT there and a strong turnaround going higher in the bonds, that will a lot of times lead us to a reversal taking place or quarterly shift or some type of change in the state of delivery in the other assets that this asset class influences. Right? So I hope that makes sense. That is why it's important, and that's why I watch all three of them. I don't just look at the 30-year, 10-year, 5-year, because I'm looking for these types of things. Where's SMT in this asset? Where is this asset going? Because then once I figure that out and I move to the other currencies and DXY and the indices, I have really strong fundamental back-end overall market analysis to back me up if I determine one thing or the other in the indices and DXY, right? You can also use this as a reverse correlated asset to the DXY, right? If this is going higher, that's bearish for the DXY. If you want to keep it super simple. But again, if you don't look at all three of them, you're not using this analysis concept to the fullest extent. Doesn't mean it can't help you, right? If you want to keep it more simple, you're just like disregarding a piece of the puzzle. So yeah. The moves that we seen last week is headed for a correction this week. I wouldn't be surprised. Again, there's a huge range that's taken place in all the assets. Things have been very, very aggressive, one-sided. So remember, like I mentioned early on in this video, large ranges lead to small ranges. And large ranges lead to small ranges lead to large ranges. We're in a state of large ranges. Okay? So again, we want to keep that in our view, right? Keep that in mind. Okay, and of course, we want to see what's going to take place here, right? This is technically a run on stops, right? If we can end up violating this fair value gap, getting up and doing those things we talked about on the monthly chart, this will have proven to be a YouTube model, also a market maker buy model. This move from this high to the low, back up to the high, created a market maker buy model. If you go to the lower time frames and observe that, I'll leave that study for those of you that do like to dig into market maker models. This could be turning into a large buy-side market maker buy model. This could be the first stage distribution, right? We may get up into the second stage distribution up here as well. If, of course, we get above this monthly fair value gap, that is confirmed. And I would be very, very pressed to want to reach the highs up here And I'd support that dramatically if we do see that take place. But again, we'll have to see if that takes place. It's just a future observation if that does happen. But again, for this market, we're looking for what's going to take place here inside this fair value gap. I don't want to see us break outside of this. I'd prefer to honestly see this candle here, this up candle, act as a bullish breaker and push price higher, right? So the midpoint of this order block here, the volume imbalance and this swing low and staying below that monthly fair value gap, those are my invalidation points for price wanting to continue to go higher in this market, right? So yeah, I hope that makes sense. Again, I want to observe how this is going to respond here. The high of this candle to the midpoint. I'd prefer it not to violate all of this candle. If it does that, it's very less likely to want to go higher. So we'll see if that takes place. So far, for now, I'm going to anticipate us continuing to go higher because that's just what it looks like, right? We've also taken sell stops, taken buy stops up here, right? So because stops have been taken here, stops have been taken here, and we closed above it. If we could stay above this level, this again could end up being a change in the state of delivery, right? This range, given the fact that this low violated this low, okay, this high was violated by this high. If this stays intact and does what we've just mentioned with price going higher, we now have to adjust our range observations. Now it would be adjusted to here, right? It'd be adjusted to this area. Let me remove some of this stuff. Okay, let me, whoops. So yeah, probably remove some of this. Oop. So yeah, when buy side's taken like this, right here, and then comes off of the heels of us taking sell side, this price delivery now becomes the range we want to observe. If price is gonna continue to go higher, because now we've taken both sides, right? And so if it's going to support this going higher, and some of the other things we were talking about is going to stay intact, this could now be reasonably observed from the low here, the most recent swing low, to the most recent swing high that gets created, so we can move with price in terms of price, premium and discount price delivery, so for navigation, right? So yeah, that's something we can get into a whole lesson about. I'm not going to do that here. Maybe a topic I'll talk about today in my private community. It depends on if I get quite. I think I did a video about it, but we'll see. But yeah, so I hope that made sense to you guys. Let me look at the comments. So it makes sense to look for internal range liquidity on the bonds having taken that recent high. Yeah, it makes sense, right? Obviously, again, my invalidation points, given the fact that it took this high off the heels of the SMT here and price has just been really aggressively running. Right now, given the fact we took the high, it's not unreasonable for them to open up next week and then try to seek some form of discount in this range up in here. It's not unreasonable at all for them to want to do that. We also have this particular, let me see. We have this up candle, right? So that may end up acting as support. We also have this fair value gap. Ideally, we don't want to get back into any of this because this is a potential buy side breaker. The whole range down and up in this regard should act as a balanced price range in itself because that's the nature of a breaker. That's the nature of a bullish or bearish order block. So that should take place. And if it doesn't, again, my invalidation levels are these 3 PD arrays for a reason. That would really contest the balanced price range idea off the breaker logic I just mentioned. We're getting a little bit into advanced logic, so I hope I don't lose you guys talking about this concept. But I hope that made sense and kind of piggybacks off of some of the things I have been mentioning recently. Yeah, I can go on for hours about each thing that we've talked about today, but I won't bore you guys to death. Daily has liquidity void right around 50s. Yeah, I wouldn't doubt it. But again, given the fact that this could end up being a bullish breaker, we also have this bullish order block. It may not even try to get down there given the PD array matrix and how price likes to seek liquidity and navigate balanced price ranges when they're present as a result, right? So again, I would prefer going into this week for us to hold above this level here. Preferably, obviously there's a potential for it to do this. Remember what I was talking about the wicks, right? When there's a huge candle and a large wick that overlaps it, not only is this breaker, if it is a potential valid breaker, right? If it can provide evidence that it's going to support it, not only is that a balanced price range piece of logic we can use moving forward to support price staying above and breaking through that monthly fair value gap we see here. Not only is that stuff the case, but remember the large wicks, when they overlap like this with a large candle, that whole wick should act as a balanced price range if you draw that range over, because buy side and sell side was offered there. So generally when this happens, if you guys have been listening and watching and studying this based on what I've been talking about the last couple of weeks, it generally respects it if it's going to continue. It doesn't really try to dig too deep. Maximum it'll dig into the middle portion of the wick that was overlapping the candle we're looking to see price pull back into, or the range it's looking to pull back into. Does that make sense? If that makes sense, I'm telling you, you guys are moving light speed, right? Let me see if that makes sense to you guys, what I just mentioned. In terms of balanced price range, there's obviously probably questions about balanced price ranges, but this here is one signature for a balanced price range. Consequent crush me if that wick is just about 50%. Oh yeah, that's interesting. That's a very interesting observation, Fritz. Isn't that interesting how things overlap? And I didn't even have to go down to the lower time frame for us to identify that. Right? It just shows you higher time frame overlaps lower time frame, and a lot of things in the lower time frame will justify things that we're observing on the higher time frame. I'm grateful that that makes sense to you, Fritz. If any of you guys have questions, let me know. But yeah, we've talked about a lot of important things. I know it sometimes takes a while to to move on from one to the next, but there's just so much that we need to talk about, you know. And I like the more stuff I can expose you to, you may end up having more questions. But the next time you talk about it, and then the next time we talk about it, whatever you have confusion about, it'll start building in the understanding, and you'll start to be able to see it and observe the things taking place in front of you that maybe you weren't aware of. And then eventually, as experience shows, you will be able to absorb it and have a profitable experience by borrowing my experience, touching on certain things. Right? So yeah, so these are the reasons why I don't really anticipate price, if it's going to go higher. This is a reason why I don't think we should have a super deep retracement. And again, if that logic is violated and the order block midpoint, volume imbalance, and the swing low is violated, can you see clearly how that justifies that buy side will not be on the table anymore, and we will then switch from one direction to the next? That's our invalidation principles at play. Very simply, not over complex, not a ton of moving parts, very simple ideas based on what we see in price currently, near term. And then, of course, those near term areas, if they're violated, generally can put us in position to capture and make sense of long term ideas, especially because we're on these higher time frames. Right? So, yeah. If that all makes sense, again, I'm looking for price to open up, possibly retrace a little bit, hold inside the up candles here as a bullish breaker. It can want to reach down into that 2-week wick I just mentioned here, right? So, I want to stay up above these levels. If that all remains, then again, we have the upper portion of the fair value gap on the monthly in jeopardy. And then, of course, we have this weekly candle here, fair value gap. And then, if we could just continue to support that, buy side should stay intact. All right, so if that makes sense, great, right? But if you have questions, let me know, and I'd be happy to do what I've been doing, going back to your guys' questions, because this isn't just for me to talk and build any type of notoriety trying to claim that I'm right. It's all process trying to get you guys to understand And some things may end up being a little monotonous. Some things may end up feeling like, oh my God, just move on. But, if that's how you feel, how do you expect to be patient in a trade if you can't be patient and listen to information that's meant to help you? It's just, got to reason with ourselves at times. And, that's just a reality. You know what I mean? If you want to master some complex technicalities and a thing that is literally made to manipulate you and destroy you and blow your whole account and steal your wealth rather than build it, obviously, trying to listen to the very technical, sometimes boring things is a very profitable thing to engage in and be interested in. It's not all about entries. It's not all about, hey, where's price going to go here and where's it going to go there? It's about the context behind those things and how you can manage those for the long term and survive. Goes back to risk management and why I talk about it all the time. But yeah, if all that makes sense, we can move on. Again, just a quick overview. I want to see this go higher and stay above these levels up here. So marching forward, because price has been so one-sided, hit the opposing PD array, swept out a lot of buy side. I wouldn't be surprised if we get a retracement to start the week. If the week's going to be bullish, that's what we want. We want it to pull back because we want to think like smart money. We don't want to buy at a high. We want price to pull back, come and sweep up orders. So the people that are down here with their orders trying to sell, if we're going to buy, we need them to be on the opposing end of our trade. So where's the losers at if price is going to go higher, right? Or the opposing view, right? I don't want to be disrespectful. But if we want it to go higher, we got to have someone willing to take the other side of our trade. Where are those people? They're going to be at discount levels because they want to short, So again, we'll see what happens here. We got this monthly bullish order block to pay attention to, like I mentioned. So that's another level where we could potentially see price dig into. And then, of course, that 2-week area, we have that huge wick. And we I think I should mark out the midpoint, huh? Probably be helpful. Alright, so yeah, let's we're gonna keep that in mind. Just put that, it looks a little busy, so let me throw that in there. So yeah, my line in the sand overall is the low down here. Let me just double check that. Yeah, it's the low down there. Overall, breaking through a lot of these levels though would start to give us a preconceived notion that we may start to see things changing because we're going into the week one-sided. I want to see price pull lower to go higher. Why? Because our assumption is bullishness until proven otherwise. Has it proved us otherwise? No. There's been a crack in correlation, but there's not really much to correlate off of this aside from the yields, which does the opposite. And the yields also supports potentially going lower. So we'll see if this can stay intact with that and then give this a move higher. If not, again, if this goes lower, that's going to justify what we talked about for the economy and how the things taking place are positive for the US dollar. If this ends up breaking lower and violating all these levels, that's something that should take place if the DXY is going to be strong. If it's going to, or interested in going higher. This should drop, yield should go higher. So again, we're keeping that in mind as well. But until these levels are proven otherwise, we go off what we see in price. Okay? And this could be a near-term target before the whole monthly fair value gap is overall solidified. If, of course, we see that take place. So many PD arrays that support pullback. Yeah. So many things are overlapping. So you can imagine on the higher time frame, if they start to be violated with little to no support, and it just starts sliding down, cutting through like butter, clearly we need to be cautious and adjust. We don't want to marry an idea. I could care less if it does want to go higher or not. I'm totally fine with it declining, right? I'm also totally fine with it going higher. And I know within that transition period, if I do end up getting it wrong, I don't care because guess what? I have my risk rules. I know these things are consistent and I trust myself, as you should trust yourself, to to be able to do things properly, because we are rooted in actual facts and things that truly impact the market and are very easy to prove the validity of. It's very, very simple to go in there, use the things we talk about, and see it validly playing out. I do it live and I do it here. I do it like 6 days a week with my private community. But every time I'm here doing this on Sundays, for the most part, for the last couple of weeks, majority of everything has played out. Aside from the cracks and correlation here and there. Before the market started shorting in the NASDAQ and indices, we called the short because of S&T showing evidence that they were offloading their buy positions with the COT analysis. Then we had S&T at the highs, and then price broke down on the indices. And if you go back, but before the drop took place, and watch the live call where I talked about it, you literally can see it that we called it way ahead of time and have rode this down the whole entire direction lower. Obviously, it's hard to anticipate just how dramatic it's been, because who the hell is going to say they understood that? We don't know what was going to take place. But yeah, for the most part, the more you show up, the more you realize that what we do here is pretty amazing, and you're in good hands, and you're in good company as well, because we've all been through losses and ups and downs and whatnot. So we're here to help each other. That's why I want you guys to invite people that you care about, people that you talk to about trading, if you have any trading friends, and bring them here so then they can also prosper as well. And we could just be a dynamic group of people trying to help each other, not put anybody on a pedestal, not do any of that. The goal is clarity and independence, and I just play a small role in that for those that come and want to help or want help from me and perspective and stuff that actually works, So yeah, if everything makes sense here in the bonds, we'll move to the yields. So everything we just talked about in the bonds directly reverse correlates to what's taking place in here. So if we want to see the bonds go higher still, we want to see if there's any justification for the overall yield market, which, look at this market and look at DXY. How amazing is that correlation? Isn't it spectacular? Right? Just this alone shows you you should be paying attention to what the bonds and yields are doing. Right? The whole yield market has declined dramatically. As a result, the DXY has declined dramatically. Literally perfectly. Right? It's incredible. And we may even end up blowing out the lows down here. Right? Obviously, we'll see what takes place, though. Before we move to the DXY, though, let's continue to identify what's taking place here. We don't need any of this upper stuff. So we see this big fair value gap, like I've been talking about in terms of balanced price ranges. Price has used one candle to overlap it. So guess what? As long as we stay below this fair value gap, this should act as a balanced price range, and we should be able to decline. If we were to violate that and get back above the monthly fair value gap, my eyes go directly to the wick and the upper portion of liquidity, right? Very simple, If it violates this, it's going to start violating all these levels in here. It's going to start violating these wicks in here and new wick opening gaps and so on and so forth. And, it may end up leading to us getting up above here, which then violates volume imbalance, monthly fair value gap, and a swing high for this weekly chart. Right? So, again, if we think the bonds are going to go higher with what we talked about, it's reasonable to anticipate the yields are going to do the opposite. So just like how the bullish idea was going to be supported by the monthly fair value gap getting traded to above, right, on the bonds and using it as support, the reverse is true for this. We want to see this used as potential resistance. We have this huge wick in here overlapping this candle. So guess what? I hope this is becoming repetitive. When we see that, we don't anticipate price breaking through this wick here. So this whole upper portion, if it's creating a fair value gap, should be left available. Because why? It's a balanced price range above price, given what we see here. Tony said, it changes everything and you can wait for what's really happening. Yeah. And remember, the things that I teach, the stuff that I shove in your guys' face all the time, well, gently, right? I'm not like aggressively making you eat something you don't want to eat. But where my mindset's at, as I'm speaking, as I'm deciding what I want to talk about, as I'm teaching, the bio tells you the whole thing when it comes to this channel and my private community as well. There's a little bit more involved in that aspect. But the whole goal on my YouTube channel is to provide clarity. Because clarity is what will lead you to being confident. Confidence will lead you to, potentially marching towards profitability and then independence. It's a process. Very first thing is gaining clarity and understanding of what the hell's going on. How do I trust what I'm doing? That gives you the ability to walk on your own a bit and start to trust things. As you grow in your experience, you then start to, feel like you can do it on your own. And then eventually, maybe you end up doing it on your own. Obviously not everybody can be saved because not everyone's going to listen. Not everyone's going to follow the rules. Not everyone's going to not overtrade and over leverage. Not everyone's going to take what's said and taught and proven to work to heart. Not everyone's going to be able to do that. And as a result of that lack of discipline, not everyone will be able to be saved. You know what I mean? The concepts can be the very best because that's what I believe these are. The overall process can be the sharpest. You can have the best model, the best this, the best that, but the operator of the tool has a role to play, the most important role, and that's accountability. That's your willingness to be disciplined. Okay? So again, it's very important. And everything I talk about, every time I open my mouth, has to do with clarity. How can I build clarity? And how can I help you protect yourself as the trader? I'm not here to get you in trades because that's your job. But I am here to give you tools or amplify and highlight important things about these tools that you can go in and operate within so then you can have the opportunity to, have a better chance than most at becoming independent. No guarantees, obviously, because no one can guarantee anything. There's probabilities in this market. And, I'm not taking your trades for you. You're doing that, which is why you don't want to solely put all your faith and hopes and aspirations into someone providing signals, because that you're giving someone else the ability to feed you, but you're also allowing them to starve you because, refusal to do this on your own and put in the work and make the sacrifices and build the skill set for yourself. That's not a long-term plan. That's let me get it right now. I'm a gambler. I want everything served to me on a platter type of mindset. And that ends in ruin. And most people come into trading and end up in the trading graveyard because they don't change that about how they view the market, how they view trading as a whole. It's not a casino. It's a skill set, It's not about gambling. It's about doing things properly with the right tools that are proven. And I mean, you just go watch some of the replays and it's proven that I know where the market's going. And, my private community gets the opportunity to see a lot of in the moment, real-time price delivery where we call out multiple trades a day. And, there's losses here and there. But then again, we know how to manage that, and just because I call out 5 trades in my private community calls doesn't mean we take every 5. But some of my students need those extra opportunities to validate whether what they're looking at is something worthwhile and it isn't incorrect, opposed to, some of the things that I call. The last 2 weeks, I've been calling buys and sells, like back and forth, That doesn't mean I took all of them, which they clearly know because I talk about it and show it. I might do a similar thing here too, show you the arrows and proof, and it's a live account, so on and so forth. But, there's multiple opportunities that take place in a day. But yeah, all this stuff is vitally important. But yeah, so again, given all this, the balanced price range idea should be able to stay below that, similar to how the buy side should stay being respected or getting violated, right? Trading higher here in the bonds All right, we should be able to see it retrace, hit a logical level, and go higher. If it doesn't, it'll violate the balanced price range idea and downside PD arrays for the bonds. And then that could lead us to something headed to the downside, which supports even more long-term bearishness in the indices, right? Just supports that, we won't really be interested in rebounding for a while. That may be the case. It may end up turning into that being the case, but we'll see, And so again, if that's the case for the bonds, the opposing view should be the case for the yields. So in this case, obviously, these levels, like I mentioned, should be able to hold in price. Right, so yeah, I hope that makes sense. And we got the monthly fair value gap down here. We got monthly lows. So we got some logical targets for that to take place as well. We got relative equal lows that were left here. Right, so that is going to be of interest. Right, very ironic that they left that. Again, there is SMT, so again, we want to see how this reaction is going to be. If it violates this, right, and gets above that, that validates the SMT, right? Just because there's SMT, that doesn't mean you go in and enter the trade. It doesn't mean that. If you do that, that's why it fails all the time, because it takes more. You need to use it as a prerequisite confirmation, unless, of course, it's in a time where, maybe it's just retracing, hitting a bullish PD array, for example, like a fair value gap or an order block, and you're still anticipating bullishness. Everything screams bullishness. If you get SMT at a higher time frame level like that, and maybe you drop down to the lower time frame and see SMT supporting a buy side example in that regard, sometimes you can catch a turtle soup if you time it right using those tactics after a run on stops inside a higher time frame PD array in a market that is predisposed to go higher. That's a little nugget for you to go study as well when it comes to SMT and catching turtle soups, right? I'm not going to go into great detail about that, but definitely worth the study, right? Let me look at some of the comments. Looks like weekly just coming out of a second stage distribution on the monthly market maker sale model. Yeah, for this one over here, for sure. We're still not fully completing that. I like how you pointed that out, Fritz. The gears are turning, my brother. The gears are freaking turning, brother. I'm telling you. I love to see it. Oh, God. It gives me chills, dude. when I just know the things that are so important are clicking for you guys or anyone that comes to me for help. The gears are turning, bro. You're in the right mindset in terms of what you're seeing. So keep that up. All right. So, yeah, monthly low just got violated here, too. So, again, balanced price range idea I was mentioning. Remember that large wick I pointed out on that weekly chart, right? You take that, break that down to the daily chart, and you can see there's a lot of delivery. Completed a market maker sell model here as well. And of course, if you go to the weekly chart, you could see that inside this retracement that created a market maker sell model that I just identified, that's working inside this larger market maker sell model as well, right? And if this does end up targeting the lows down here, this will have proven to be a very large time frame market maker sell model, super long term, and that could be the case. But obviously, we want to wait and observe if that's going to be the case. It may not. Lots of stuff can change from this low to that low. So yeah, we'll keep that in mind. If it does present itself as something that's taking place, and so be it. Just something that we can add to the bank of experience and observation. But yeah, so again, I hope that makes sense, right? So again, we're going to see if this can retrace, open up for the week, give us a wick into there. Hopefully it can respect the midpoint of the wick and definitely respect the midpoint of this monthly fair value gap. Or is it a weekly fair value gap? My bad. Had that outlined incorrectly. Right, so yeah, does everything make sense so far? So we can move on. But yeah, Sufi. Hint. I definitely did. But some stuff will go over some students' heads, but it's all right. They'll catch on eventually. You caught that, so definitely go think about that. Or at least as a situational awareness tactic, like market maker models can end up being a framework Not only that can they be a model, but they can be a larger bias framework for confirmation. If you can identify the phases, you can use what I mentioned there that you're highlighting. You can use that as also a prerequisite for you to find your whatever model you're using. If you see that take place, just another signature in price confirming price is going to continue, right? Specifically the S&T at a higher time frame PD array. So yeah, and that whole detail. But yeah, so I'll assume that all makes sense. So let's move on to here. So again, we talked about how prices ran aggressively to the buy side here. If we shrink things down a little bit, we could see that it's just been a total entire mess. Really far down to start the month or start the year, and now prices now accelerated to the buy side. We got relative equal highs up here. Unless something changes between this, we're gonna just continue to agree with price going higher. Obviously, we'll see if that ends up not being the case. Again, just so I can highlight this again ad nauseum. Okay. When you see price creating an overlapping phenomenon of fair value gaps like this, this ends up being a balanced price range. Okay, so what is that? How's that helpful? Well, price is going higher. We should continue to see balanced price ranges supported, order blocks, fair value gaps supported to the buy side, and should just have little to no issue getting through buy side targets. In this case, for the balanced price range bullish. Right, we came all the way down, came all the way through it. Notice how it did not even try to get back to it, right? Because that's a signature also, showing the fact that it couldn't even get into it at all. That's very, very bullish. Okay, so we're going to continue to observe buy side targets, see if that's going to continue, right? So yeah, we'll keep that marching higher. We'll continue to observe this as well as a monthly balanced price range. And then, of course, let's see, can we get this a similar phenomenon here? So I want to point your attention to this as well, this example. See how price retraced here? Let's go make an observation real quick. Show validity to the fact that this is a balanced price range and how that should deliver in price. Look at how perfect the low is of this candle. This blue candle right here. You think that's random? I mean, that's just perfect. And price ended up going higher. Create a balanced price range. If it stayed above that balanced price range, didn't close below it, we should continue to go higher, given the fact that it was bullish here. And what happened? It supported price going higher, again, to this high. Right? So very similar tactics are used continuously, and this is also true when you're in a trade on the lower time frame and you're trying to manage a trade. Say this was like the 5 minute and you entered somewhere in here for like a or in here for a YouTube model, and you were holding price because this was the YouTube model here on this higher time frame, right? Say this was your position on the 5 minute, price was moving, and you see this taking place, right? Price should stay above this, and you could be able to have trust that you can hold your trade through that because it created a balanced price range. So when you're on a higher time frame or lower time frame, whether you're on crypto or indices, it's all the same. It does the same shit over and over and over. And this is a very common thing. And this helps you identify trust in a narrative, trust in an area continuing to rally or decline. And in this case, as long as this stays intact down here, I'm going to continue to want to target buy side. And we'll see what happens if price gets above that buy side liquidity pool. Right? But for now, we'll see. Maybe Euro ends up blowing out the highs here, and we keep an S&T at the highs here, and then maybe it starts to decline. We'll see. For now, we're going to continue to trust buy side delivery until proven otherwise. Okay? So move to the weekly. A lot of the analysis from last week is still intact this week. Talking about the balanced price range down here, overlapping fair value gap, overlapping fair value gap. Should be able to stay above this. These up candles here create a breaker if you drag this over. Okay? So we should be able to stay above that in conjunction with this other balanced price range idea with the overlapping fair value gaps sitting right on top of this bullish breaker, which is also a balanced price range. Okay. So yeah. So yeah, we're going to see how this wants to behave here. And I'm going to continue to trust that this will go higher unless we break through these levels. It's just the way it is. Because if this level is violated, we have fair value gap here violated, fair value gap here violated, balanced price range overall violated, multiple PD arrays over here violated. Lower prices may end up being the case, right? This could be showing us changing the state of delivery, especially if we close below this level. So yeah. So again, I wouldn't have any issue switching, right? Especially if the DXY starts to rally, which, like I said at the beginning, fundamentally, the information we have at our disposal in terms of the news, right, and what's actually taking place in our economy in the United States, it supports DXY getting strong. And that obviously is opposed to foreign currencies rallying, right? So we'll see if that ends up showing up more in the delivery we see moving forward. Okay. So yeah, looking at this, let's see, is there anything I've missed? We got this overlapping of the volume imbalance. Price quickly got away from it. Don't really see any type of SMT of any kind. Yeah, there was nothing. But again, we hit that opposing PD array, bearish higher time frame PD array. So yeah, we're going to continue to monitor how this behaves. Obviously, nothing's changed just yet in terms of this continuing to go higher. If you're looking at the weekly chart. So again, I want more evidence to change my narrative. Narrative doesn't change. Bias just turned from bullish to bearish for a short-term period. All right, so we'll see how price behaves considering the fact that we got down below here. We now actually have an SMT here between the lows, right? This candle and the low, this candle and that low. So we're at this higher time frame PD array here as well. Very sporadic consolidated behavior, strong response away, but overall structurally, again, bullishness is still intact. So we're going to continue to march forward with that in mind. All right, so yeah, and then we got this weekly fair value gap. See if we could stay below that, or are we going to get back above it and get back to contesting get back to contesting the midpoint of the weekly fair value gap there. All right, so this weekly bearish order block, also a breaker, right? The up candle here, all the way down, drag that range over. That's also a bearish breaker, right? So price ended up staying below that. So if this is an extended delivery to the downside, it just came to a premium up here to hit this breaker, and then it will have violated these levels. And then, of course, if it can have a strong movement below this fair value gap, overlapping that yet again, this will end up being a balanced price range again, but for the downside. Okay? Into the upper inversion of fair value gap on the monthly GBP USD. Not really. I mean, if you want to try to consider all the this all the way over here, that could be the case. I think a lot of this stuff, at least from what I'm looking at, is fairly important. This right here could end up. Oh, you're talking about this one, I think, right? Yeah, if it gets below that, that could end up being an inversion fair value gap. That monthly fair value gap. Of course, we have it all layered, broke down to each time frame, so we get a little bit further context. But again, if that monthly fair value gap's violated, if this one's violated, and just this overall fair value gap and the swing lows and stuff on the daily time frame liquidity pools as well and structure, if all that stuff gets violated through this, again, if it's like a move like this that violates this level and just closes below it, that turns into now the opposing balanced price range and should support price continuing to go lower. And we'll continue to navigate that as a confirmation, especially if DXY is going to go higher as a result of the debt cuts and investment in the United States and a bunch of stuff that's powerful for the US dollar, job market being good, so on and so forth. All right, so those are underlying things we got to watch and pay attention to further justify specific moves and assumptions in the market moving forward. All right, so I hope all this stuff makes sense. So again, we're going to watch and see how price wants to behave here. It should hold in these levels and move higher again if that's what's going to take place. If not, obviously, we'll see lower prices potentially targeted. But again, I need more evidence of that. The GBP and Euro do not support that just yet. This huge wick is a pretty telltale sign that could end up being the case. So we'll just continue to observe, watch this fair value gap, see if that's going to turn into a bearish balanced price range, or if it's just going to hold using this relationship and just be a retracement to then try to purge out more buy side targets. Right? Because that's still intact, that doesn't change. We go into the market assuming that there could still be a draw somewhat deeper into this. But if these levels are all violated, monthly fair value gap, this weekly fair value gap, this fair value gap, and then some of the daily levels get violated, right? The swing lows and whatnot, then obviously we're able to then adjust, especially again if DXY rallies and the yields end up continuing to also maybe turn around and rally if that's what price wants to support. But again, even these we're still going to assume is going to continue to go lower. This will continue to potentially go higher, may open up, decline to the monthly order block and rally. And then, of course, if that's going to take place and stay the same, this should go higher. But again, we just painted in the contingency plan as well, right? So we got to keep a light narrative because CPI is ahead of us. We had NFP last week. So again, let's be very cautious and patient, given the fact that there is a very, very high risk environment. But these assumptions I've made should be able to hold in price and take place as they generally do, and if we have to adjust, we'll adjust, right? But going into this week, I'm staying on one side, right? I would prefer to see us go higher. All right, gun to my head, I want to see the currencies continue to go higher. But again, there could be changes out of nowhere based on the economic policy adjustments and things that could potentially have an impact. Now, if the currencies are going to go higher, the foreign currencies, DXY should continue to go lower and finish off the market maker sell model potentially. Now, again, we're inside this monthly bearish fair value gap, overlapped it with a huge candle. Now we're trading back above the fair value gap midpoint on that monthly chart. So we got to see price eventually, maybe retrace into here a little bit, but then there's a weekly bearish order block, which we are literally resting at to open next week. Hopefully that can lead us to continuing to blow out the lows. If not, right, if we violate the upper weekly order block midpoint, this inversion fair value gap, this monthly fair value gap, and then maybe even blow out the high up here, that turns our attention to buy side, and then that would be supportive of price continuing to drop in the currencies, which, if we violate these areas, and then we of course see DXY rally, that's supportive of that adjustment, that change in the state of delivery from what it's been doing to what it could end up doing in that regard, right? That's assuming that these levels are violated. Now, if these levels stay intact, again, we're still in a market maker sell model, right? So if that changes, or if that continues, then we'll blow out these lows and everything should stay the same. Maybe we even get a rebound in the indices if that does take place, or it'll stay cracked in correlation because it seems like it wants to stay cracked because there's so much uncertainty. But obviously that's something we'll observe and see when it kicks back in line. But yeah, my invalidation for shorts in the DXY are the weekly order block level here, the midpoint of the weekly bearish order block, the fair value gap here on the monthly that should act as a balanced price range and go lower. If not, again, that's part of my invalidation process. We have this volume imbalance So if we get above that, that's already in itself 3 PD arrays not supporting shorts. And then, of course, if it violates this weekly fair value gap, which is dragged off from over here, then obviously that's another longer, a more previous level that overlaps with this particular price delivery. And then the last final line in the sand or nail in the coffin for a price to stop being bearish is if this high is violated, because now that would turn us into a shift in market structure, essentially a break in market structure in this regard, because that's a massive change, right? And then, of course, all of the PD arrays that are violated. Notice how this retracement only violated one PD array, right? Came up into this level and stayed below these levels. Line in the sand for this move would have been this balanced price range I identified, and then the upper portion of this fair value gap merged with a violation of this high. Notice how that didn't happen, so guess what price did? It stayed intact. In this price delivery, I said last week, in the week prior, that this is my line in the sand, and these are the reasons why, right? And you could see how it's held valid because the levels held and stayed intact. So I hope that those of you that have been paying attention and studying with me are seeing these experiences and noting them, because this is the type of stuff I cannot just place in your hands. You know, the ability to watch it play out, talk about it before it plays out, and then see the rules and tactics in place and holding and being valid, especially when it comes to validation and invalidation, right? If you go back and watch the replays I did for this week, for last week and the week before that, the last 2 weeks, literally it shows you with beautiful detail why this should hold and how the thought process was and what would happen if it did get violated versus what would happen if it stayed intact. It stayed intact, so it delivered, because that is the line in the sand, right? So yeah, again, these are things I can't just hand to you and just download into your mental like experience bank. These are the things that I talk about. You walk forward with them and with me applying them, and then you grow over time. That's the thing that takes forever. That's the thing that's most frustrating for students, is because you'll learn something, go in the chart, and it'll feel disjointed, and you won't be able to trust it. But these types of things, seeing them over and over, and then you doing it yourself and practicing, using me as like a training wheel, right? And then seeing it play out until you could walk on your own, like that is so priceless. But it's the thing that takes the longest. It's the one phase of people's study that makes them quit, aside from blowing accounts and not paying attention to risk management, right? So yeah, I hope this is the emphasis on this is being highlighted. And those of you that don't maybe recall what was being talked about here, maybe it hopefully puts a fire under your ass and makes you go do it and look at it and know everything that we mentioned and save it, in maybe a section of validation and validation practice, and study and evidence that it works. Okay, because again, it's vitally important that you have these examples before the week starts, after the week ends, and just build a library book filled with all these examples, whether it's on paper, print them out, whether it's you write notes about it, or whether you use a Discord and just post in a specific channel or category for this type of study, and everything else like your model and losses, wins, higher time frame, lower time frame analysis, so on and so forth, and everything in between. Right? So yeah, I hope that's clear enough, right? So line in the sand, yet again, is this high? I start getting real suspect if it gets above these levels here, starts violating these, because getting up in this level, you're violating multiple PD arrays. We have a 3 PDA violation rule or validation rule. So if they stay intact, wonderful. We're going to continue to hold and press towards the low, supporting this as the market maker sell model it is and has been proving to be. Right? And if it's violated, we start to think about other things, and then also layer on top of the overall economic factors in terms of fundamentally that these things that are happening are positive for the US dollar. So if it violates and gets up here, that supports that idea, and we have overall sentiment, fundamentals in terms of what's happening in the markets or in the economy and how that impacts the US dollar We'll visually be seeing that hold in place if we do see price get above. So it validates our understanding of the real world impacts of what's taking place economically. And then, of course, justify this change in the state of delivery if we violate these levels through the observations we've mentioned here. And if it holds, we just continue to press DXY lower, right? And it's literally as simple as that, right? So yeah, does all that stuff make sense, guys? Let me know in the chat. I know this call's been a little bit longer than I anticipated, but there's a lot to always talk about. So yeah, let me know if that makes sense, and if it does, I will move on. It does, yes sir. Okay, beautiful. All right, now let's move on to, let's go to yeah, let's actually go here. So this is the current year, okay? So this is a 3-month chart. It's a quarterly chart. Every 3 months, there's a new quarter. Every 3 months, generally, there's a strong shift or continuation of a particular sentiment. We've passed through the first 2 quarters, right? So first quarter was bearish, it's pretty obvious. And second quarter has now started bearish as well. We blew out the first quarter's lows here with this current overall quarter that we've delivered. It's delivered like a huge amount. It's delivered a full 3 months range in like a couple days, right? It's pretty insane. But yeah, so if we take a look at this, right, let's say we move to the yearly chart, because Power 3 and same dynamics take place overall in a yearly basis as well. Just want to show you how fractal this stuff is, how it's on every time frame, how you can even use it for like yearly projections at times. Right? So we got this yearly bullish order block. That's something that I'm paying attention to because we're so close. So I want to see how price behaves if we get down there. It doesn't mean that it gets there and automatically starts to rally and has a quick response. It's just a good contextual thing, at least for me. I like these types of things to be able to be aware of this stuff. I have these types of things written down on a piece of paper. I don't have to have them, but I do want to show you this particular scenario. We do also have a 6-month fair value gap that we're approaching, which is a pretty interesting observation, right? This is obviously not something that impacts us on a day-to-day basis, just another pretty interesting context to look at, right? So the quarter's been extremely bearish. We have a yearly bullish order block well below us, right? So price may look to want to blow these levels out. We have relative equal lows in here. So that's going to be pretty interesting to see how price wants to behave around that. The month has been very bearish. I do think that we're going to continue, possibly blow this out. Again, like I keep mentioning about the big wicks, right? This huge wick, if this candle continues to remain super bearish and gets below that wick, the midpoint of this wick should act as a balanced price range. So we may look to dig even deeper, maybe even look to target areas more long-term down here, right? These are just projections as far as, what price could do and how far it could go depending on what takes place, right? Obviously, this is large time frames. These are big boy time frames for like position traders, hedge funds, so on and so forth. So we'll see if they ever fall into alignment, or maybe price rebounds and turns around. I'm, assuming and hoping that does take place because for my long-term portfolio sake. But honestly, I could really, in reality, care less because I invest long-term and day trade short-term, right? But in terms of what's important, right, we do have the low there. We have another low here. We have a fair value gap in here. This is fair value gap that may end up being impactful. Right, so we'll keep that in mind. This is a continuation chart, by the way, continuous chart. Sometimes the contract month charts don't show us, they always don't show us the full picture. But if you wanted a larger context, here is the continuous chart for the NASDAQ. So we're not trading blind in terms of what's below us and what price could be seeking if we're, just looking at like this chart, for example, right? So yeah. Price has some decent areas. It could be looking to target the swing low here, like I mentioned, and another low right below that, around 17,098. Right, that could end up being targeted. There's a 6-month fair value gap that's also in alignment with that. It's just, again, very interesting. So that could be, at this moment, it could be reasonably targeted. 6-month fair value gap. Swing lows in conjunction with that on these lower time frames. And then, of course, if it violates that, it could end up even coming all the way as far as 16,400. That could end up being a target. 16,300, 16,200 to fill in the rest of this gap in here. Obviously, that's really far. So we'll see if that even becomes anything. But keep those levels in mind. Write them on a piece of paper. Or mark up a chart like this on the continuous. And just keep it in your crosshairs, for potential targets. Because if you're on this time frame, you can't really identify those levels. It's gone. It's invisible to you if you're just trading this, because it's been such a massive delivery, right? So we're kind of forced to use this chart to try to identify these levels when most people are not going to be able to know what the hell's happening. I don't think it'll come all the way down to these levels. We'll see. It's pretty ambitious to get the NASDAQ down to 10,000. That's a serious problem. If that happens, that is massive, way dramatic. That's like 40. That's like half. That's like a 50% drop. Okay, that'd be insane. So I don't believe that's going to take place. That'd be quite frankly. But you never know. You never know, right? Like we'll see. But for now, obviously, we'll worry about that later. For now, what we need to focus on are these levels here. The fact that it was such a large range, I'm highly skeptical that they're going to open up again and do it. But they've done this twice already, 2 straight weeks. Open up, decline, open up, decline. But things may have already been priced in terms of damage, hopefully. But if not, then we'll just continue to press into the shorts. We don't pick bottoms. If there's a logical reason for us to target a retracement, we'll hop behind that. But obviously, narrative is still bearish. No reason to try to look for buys. It is accumulation season for those of you that are long-term traders or investors. Not financial advice. You do what the hell you want with your money, but that's just my opinion. That's what I'll be doing. But so yeah, these are our targets. And again, we have this yearly order block down here. So we'll see how price wants to behave there. That may be the line in the sand. And to be honest, if that's the case, we get down there and then we start dramatically rampaging to the buy side. I mean, it's incredible how controlled this stuff is, right? So we get down specifically with this huge drop, which was needed, all the way down to a 1 year order block, really, and then it rapidly increases and goes higher again. That would be an amazing testament to how controlled this stuff is. I hope it does do that. That'd be amazing, right? But yeah, there's already like supposedly $6 trillion that's been erased in 2 weeks from the markets here. Isn't that insane? I think it's insane. It's pretty spectacular. Just shows that we are a drop in the bucket. Our trades don't even show up on any radars. We're just like the small fish. The small fish that follow the sharks, the big sharks, big great white sharks, those little sucker fish that suck on them and clean the outside of them. It's kind of what we do in the markets. We're kind of like, we're out here just trying to ride the coattails of the savages. Is NASDAQ monthly currently in a discount between 50%? We are absolutely in a discount, 100%. It's undeniable that we're in a discount, massive discount, at least from this view. If you look at it from like a 5-year time frame or something like that, we're in like a tiny, minuscule blip on the radar. Again, that may just be all be controlled to use Trump as an excuse to dump people out, scare people out the market, so they can position themselves yet again at a very, very discounted price level at this yearly order block, and then just start to rage price higher. Is NASDAQ monthly, let me just reread that. Is NASDAQ monthly currently in a discount between 52 and 62? It's at the monthly wick. Is that what you're seeing? So it's definitely at a discount, right? But like if you use this low to that high, I mean that's pretty insane. This is the most recent swing low, so it's got me a little bit suspicious. But this was the start of this huge move. This was very, very much more exciting than this one. I'll tell you one thing: if we violate this low, this may turn into a different type of range. And we, if it was to like use this wick after it violates this low, retrace, and then start to decline, the whole range dynamic changes. So you would definitely not use this to there. You'd use here to the low that's formed over here. Excuse me. But yeah, if you're going to look at it from this low to that high, I'm assuming that's what you're looking at. That's definitely at a discount based on that range, right? But yeah, so again, my NASDAQ assumption is we have a large range. Large ranges lead to small ranges, so I'm looking for these lows to be violated. Until that takes place, I am not going to be bullish in the slightest. I'm going into this week starting off thinking that we could be bullish. We may see, like I anticipated the other day, a gap below the low, which again, recorded and was assumed well ahead of time, how price was going to gap below the low that it gapped below. We may see the same thing take place here because we're so close and the volatility is just so insane and intense. It may open up and just gap people through. We do have a bullish order block here on the weekly chart, so let's definitely watch this. This could be a trigger point for a potential retracement, so we're going to keep that in mind. But yeah, otherwise, my opinion is continuing to be bearish, right? If we run higher, that's just in the form of a retracement. I'm not of the opinion that things are going to be bottoming out just yet until things are proven. And even if it looks like it may present a bottom, we don't pick bottoms and we don't pick tops. We need proof. We need balanced price ranges to start forming. We need breaks and shifts in market structure to start forming. Multiple PD arrays to start getting violated to the buy side. Otherwise, every buy side delivery will be to retrace just to drop, especially in this climate. No need to try to pick tops and bottoms. But going into the week, as I always do, we look for power 3. I'm anticipating bearishness, so guess what? Large ranges generally lead to small ranges. So hopefully, if it's either going to gap below the low here and then retrace, or it's going to present us with a retracement, leaving the sell side liquidity pool here. Then after it retraces a bit, maybe digs a bit into this range that was created, maybe it presents us with the high of the week, and then another massive bearish candle to blow these lows out. Right, so yeah, that is my assumption for what I believe is going to potentially take place here on the overall indices. Right, and if we look here at the at the current contract months, right, we don't really see anything different, right? We just see a lot of running through the sell side. So again, regardless of what our opinion is going to be, whether it's going to be a retracement or if it's going to continue to go lower, again, things that are outside of that opinion, that I don't really care about that opinion, is the fact that we had a large range. A retracement is very likely. You know what I mean? And so if we're thinking, and of course that's in context with power 3, right? So the large range could lead us to a retracement. Power 3 dynamics also, if we're bearish, should lead us to a retracement first. If not, and it just wants to keep sliding off the face of the earth, it is what it is. So we would just have to just continue to try to find our model and use our timing tactics and continue to use daily power 3s as well, right? But in terms of like the weekly candle, weekly range, again, we have this large range. Generally, when you see a large range like this, the next session that comes into play is going to be harder to trade because they're trying to set people up. They want to feed the bottom is in the market crowd, right? The price is probably going to bottom out. And then they retrace to entice them, and then they start trying to buy the bottom. And then given the fact that it's so bearish, right? The downside is clearly in play. It will then turn on them after manipulating them higher. And then that's where we thrive. That's where we will get a hold of things, right? So we don't really see any, there's no SMT at the highs up here. There's no SMT at the lows down here, right? Daily chart shows us really nothing, right? So, and we've, again, blown out the higher time frame low, right? We saw the likelihood of this potentially coming down here. We don't really see anything going against the assumptions that I've just made, right? So again, if we do get a retracement, we do have this wick, so we'll break that into quadrants and see if that's going to hold in price. But again, things are bearish. This large range has us thinking that, you know, price may gap below it, then retrace to then continue, because price doesn't just go in one direction. Or it's just going to stop, leave that there to build in the idea that support's being left, and then maybe it pulls back as a result of that, and then ends up giving us a sharp decline. Okay. So yeah, I hope all that makes sense. S&P has swept the weekly wick. Not that I'm aware of. Yeah, I don't see that. Yeah, I'm not 100% sure about the CFD chart. The CFD is going to follow the opinion that's made on the futures chart, because it's a directly linked market. The price action itself sometimes looks different. So I'm not 100% sure. But the assumption that I've made here, excuse me. So the assumption that I've made here in this chart, if you trade CFDs, for those that trade CFDs, this assumption is going to outweigh whatever the CFD chart may be showing, because the CFD is following this market. This is the daddy of that market, right? So whatever this does, whatever this is going to favor, CFDs are going to favor. CFDs are controlled, right? They are more manipulated, similar to how Forex is manipulated, because CFDs are not really going off of the liquidity and order pairing ideas that the future markets have, right? The reason CFDs were created is because the data feed for the futures market in America is not available or given to these assets outside of America. So that's why you'll see there's a lot more discrepancies. There's a lot more manipulation that takes place, similar to how Forex is heavily manipulated, because they have their in-house liquidity that they use. That's why the data is all different between all the different brokers, all the different data feeds, all the different providers of that asset. But yeah, again, so if you're trading CFDs, you want to definitely get a feel for what this asset is doing, what this is telling you, and then of course, since you're going to trade the CFDs, you got to go off whatever PD arrays and price action is showing in the CFD chart that you're trading. But narrative-wise, these markets will dictate what's going to take place. Don't want to keep choking in your guys' ears. I had to mute real quick. Don't know what the hell's wrong with me. Hope I'm not getting sick. But so yeah, quick down and dirty in terms of what we want to see in the indices. That's pretty much it. You know, we've had this huge decline. I would not be surprised that price gives us a retracement. But again, what in the hell is going on? Do I not have a... let me see. Yeah, there's not really much of a draw on liquidity there for, unfortunately, for the current contract month. So we're gonna be referring a lot to the liquidity here in the continuous contract because the other contract months don't really, or the normal contract month doesn't have any liquidity that's left. We literally blew out pretty much all the gains that were made last year. Like all of 20. Let me see. Okay. Yeah, January 24th. All the gains, or 2024, right? January. All the gains that were created and artificially made, all taken away in less than 2 weeks. Unbelievable. This just shows you how fake the previous administration's economic policies were being. They were printing money, making our children's children bankrupt to artificially increase the chances of them being elected by falsely showing that the stock market was doing good by benefiting government contracts, giving it to certain companies, and making the little guy deal with inflation as a result. So yeah, this here is like liberation. It's us getting payback to how we've been treated as citizens of the United States. We were played, completely abused. It's unbelievable. And as a result, the world was also impacted. So not only that, not only us, but everybody else that depends on the U.S. dollar and U.S. economy being strong. We were all hurt. Yeah, buy low, sell high. That's for damn sure. And guess what, Fritz? If you go watch the live stream that I did back here in February, right before this tanked, I think you will be pleasantly surprised at how beautiful our analysis was. We've been literally on point as far as where price is going to go for like 3.5 years. Here and there we've been wrong. Obviously, it can't be perfect. But overall, like 70 to 80% of the time, we know exactly what price is going to do. Doesn't mean we're able to execute. You know, there's been a couple of times this previous week that I missed a couple opportunities because price just didn't offer it. But the direction was correct. The narrative was correct. But again, just because I miss something, does that mean I disregard the stuff that I teach that I know works? No. Just because I take a loss or two, does that mean I'm just totally going to revamp and now I want to look for his venom pattern that he supposedly just created? No shade against him, obviously. But I say that to say, like, just because I take a loss or something, does that mean I just disregard and try to move on to these other things? Just to try something else? No, it doesn't. If you found something that makes sense to you and works, all the models that ICT teaches are the best. There's no one is the best. I know which ones I like, but that's because those are the ones that made sense to me, and those are the ones that I apply. You know, if you like OTE, stick to OTE. It's amazing. If you like the 2022 model, stick to the 2022 model. It's amazing. If you like the breaker, stick to the breaker. It's amazing beyond belief. Okay? If you haven't found a model and you look at ICT's other models, the laundry list of other things that he's taught, and there's one that you like more than anything else, stick to it. Don't fall into the trap of the new traders that are learning, thinking that you have to learn every single one of them or it's a life or death situation. You need a baseline, first of all. It's good to be well-versed over time, but again, that's a key word, over time. You know, you're not instantaneously going to watch a video of all these different models and automatically have the experience in applying and all the trust that's built over time by applying the specific models in 5 days or in a month or even a year. It doesn't work that way. You know, it's just like working out. You can't build your biceps and your whole body by doing one week of working out. You know, there's no be all end all. You know, it's what works with you. But again, the things that we do here build clarity and analysis, where price is going to go. I build structured discipline tactics behind discipline, the proper mindset. Okay, all these things that are set aside while people are so distracted with trying to do things that are like 5 steps ahead of them. You know, like trading live when we don't have a trading plan in order, right? We're trying to jump the gun to try to get over there first because I want to hurry up for whatever reason. This is not the industry to do that in, because you'll learn on your own. I don't even have to say anything. But, you know, the market will tell you, and it will be painful. It'll be a painful lesson. versus just focusing on what truly matters, hopping on a live calls if you do want to see things in action, and paying attention to one model. I operate 4 different models, so maybe one of those 4 models are things that you like. You'll see a fingerprint of every single one of them continuously, and when the situation arises where one is applicable, I talk about it. So then you know that that's an example of this model or that model, breaker, YouTube model, continuation variation of those 2, market maker buy and sell models, power of 3 ideas, right? Those are all things that are pillars to my analysis. I also do institutional order flow entry drill, right? That's based on balanced price ranges. I've been talking about that a lot because I'm going to try to touch on institutional order flow entry drill here in a couple weeks. It's pretty much the same, just with a BPR instead of. Yeah, I guess you could say that. Mind you, again, a lot of the models too, a lot of them are just like viewed from different perspectives, and then new names are slapped on them, right? Because some people learn differently. Some people see things differently. So there's different scenarios in the market. That's the thing too. They're also situationally different, some of the stuff. Pretty much 95% of ICT's models have a run-on stops. There's some that don't. Some of them include the run-on stops as the entry tactic, right? Which is at the SMT thing, which the SMT for a turtle soup, right? That model that I talked, framework that I just mentioned earlier, with the SMT at a higher time frame PD array inside of a kill zone, preferably inside of a macro where there's a breakdown inside of a higher time frame PD array with an SMT. That is a model itself. You just catch the high going into the higher time frame PD array in a specific time. And then you couple that with intramarket relationships and stuff like that. That's a whole model in itself. But of course, it's the highest. ICT says turtle soup is the highest form of entry because you're predicting the stop run is going to reverse. Yeah. If you go through all his YouTube channel content and all his stuff that he talks about in his private community, in his lessons, he talks about it ad nauseum. He calls it smart money technique. He has thousands of videos, right? And I've been through pretty much all of them over the last years. So I could definitely tell you that he does mention it a lot. Just maybe some of the stuff you've dug into recently, maybe he hasn't. He didn't speak on it as much. They wiped out. Yeah, it's sad. They wiped out everything. It's sad. All the profits made from last year have been wiped. Kind of sucks. But it's all right. But yeah, guys. So this is pretty much all I had for you guys today. I hope you guys got value from that. So I preach COT. COT is one of my higher time frame analysis concepts. Matter of fact, I actually broke down a COT view. Broke down COT for this current month that I'm going to share with my private community. We're going to talk about that in a little bit. All right, so there's something, price is telling us something here. And I've talked about it before. I'm not going to go too deep into it now. The call's been a little bit too long. But yeah, COT, the short and sweet to answer to, is it worth looking at? 100%. Now, is it going to always 100% of the time, every single day, every moment in the marketplace be a time to use COT? Absolutely not. It's not one of those tools. It is a long-term lagging indicator to help you confirm or negate, whether smart money is justifying from a long-term perspective, whether they're offloading their shorts or offloading their buys. Them offloading their short positions means they're getting ready to buy. In my opinion, what we see in this COT chart, that's what it's showing us, right? So they're offloading, they're buying in while price is going lower. That's just what smart money does. They sell fear, so people sell all their assets, and they can continue to, stock up while majority of people are uneducated with the stock market and how things operate. So they sell when price is going lower, versus the mindset I said earlier, which is, look at things as a sale, fire sale. Everything's on sale. Do you really believe that Apple, Tesla, Amazon, all these other markets, Eli Lilly, the medical place that's like number one in the United States, all these military contractor companies, open AI style companies, like AI companies, NVIDIA, do you really think all those companies are going to go to zero because of a tariff? Do we really think long term things are going to not rally? Like, companies are just, these billion-dollar companies are the biggest in the world. Do we really think that they're going to stop being the best and the best? No, I personally don't. Anyone that thinks that is off their rocker. Okay. They got to reevaluate how they look at this stuff. These things happen. We're only down, what, like 5.5%, 10% maybe, in the overall grand scheme of the stock market. I mean, you look back in history, it's been like that for decades. It's happened over and over. And you know what's always said after these huge declines? Man, I'm so grateful that I got in and was able to take advantage of the compound interest of buying the dip reasonably, right? But then you also have the crowd saying, "Oh man, I wish I would have just realized that it was just everything was on sale. I should have just, if anyone hasn't started being an investor, this isn't financial advice, it's just my opinion. But if I could go back and tell myself something, I'd be like, yeah, every time the market crashed, I should have had cash so I can invest long term into a retirement account, because this is where the gains come. Because when we get back to where we were at, it's giving us another chance to participate in gains that were potentially missed last year. We came all the way back. And in my opinion, AI is just going to speed up. U.S. manufacturing and the U.S. economy is just going to speed up in terms of being healthy and being in order, right, long term. So, those things considered, hopefully it can help you make an educated decision on whether, you should think about this type of stuff, long-term investing, or, maybe some students didn't understand, like, that this is nothing. This is good. It's amazing, because the U.S. is not going anywhere, especially under leadership like we have currently. We ain't going nowhere. I don't care what nobody says. It is what it is. Okay, they're going to have to deal with it. Is it worth... okay, yeah, Fritz. It's just one of those things, It's one of those extra things. COT, seasonality, and the interest rate markets, I classify those as fundamental analysis. And then, of course, you can have that plus sentiment analysis, which is looking at the headlines and doing some of the stuff that we did earlier, talking about how things impact the economy and what that should technically do by looking at the underpinnings of what's taking place, like cutting debt, all those things, and how that will affect the U.S. dollar, bringing investments to the United States, increasing the output of commerce. We're exporting, that's positive for the U.S. dollar. How that impacts the U.S. dollar, DXY. And then, of course, the relationship that could eventually have on the bonds, the foreign currencies, and the indices. That's my fundamental / sentiment analysis. And then everything you guys see me do in terms of risk on, risk off, that's my technicals, identifying PD arrays, balanced price ranges, liquidity pools, previous day's high and low, week high and lows, month highs and lows, those sort of things. And then, of course, dropping down to the lower time frame, we have previous session highs and lows, new day opening gaps, new week opening gaps, regular trading hours gaps, AM session high and low from previous day, Asia session high and low. Those are near-term liquidity pools, and how price navigates power 3 on both the weekly and daily time frames, and how that affects the lower time frame view. And then, of course, we drop down even further. We go for entry tactics. We got our models, whatever that is. And then, of course, we have our macros and timing elements that we use. And then, of course, that is also coupled with our risk approach, risk management ideas, and validation and validation. So all those topics I just mentioned there is like a very, very rough like outline of most of the things that create our process in terms of trading. There's some stuff that isn't mentioned. Those are all the technical aspects of what we look for the most part. A lot of it, like 90% of the things that we use, and of course PD arrays and whatnot. But yeah, indices will get back. Yeah, I totally agree. Many countries already changing their tariffs. Yeah, and it's just about fairness, right? And like if you look at what's been taking place, some countries are charging us 90% while we're charging them 10%. Like, who in their right mind thinks that's reasonable? Are we just supposed to just bend over because we're America? We're just supposed to just bend over and take it from every country that trades with us when we're the breadbasket? Everybody needs our economy. Are we really supposed to just bend the knee? And if we try to push back at all and try to do stuff that's best for us, since we're in freaking debt that's going to destroy our country, if we push back, is that really something that these other countries can just start attacking us over? And we're not even matching their tariffs. Some people are charging us 90%, we're charging them 40%. Some people are charging us 60%, we're charging them 30%. It's still not even fair, fully. And like, there's complaining? Like, what? Like, Trump should go harder. He should make it equal, like 100% equal. Because why not? Is it that are these countries that entitled to think that that we cannot have fairness just because our country's it's not even doing better than everybody. We may look like it on the surface. $36 trillion of debt is death nail if this keeps continuing. And then what'll happen if the U.S. goes under? What's going to happen to these countries that are so dramatically dependent on us? They're ripping us off, 80% tariffs. What would happen if we disappeared and that stopped? So it's just wild to see the crazy, unfair behavior. It's just unbelievable. Whether you're like for Trump or not, like just from a foundation, would you think it's fair if you were getting charged 90% and you were only charging someone 10%? Like that's unbelievable. Like, it's mind-boggling. And most of us never knew this was taking place because our leaders were just taking it, like letting people stick it up our ass and just do whatever they want. Like, it's crazy, bro. It's no wonder we're in such massive debt. Like, increasing these tariffs to more of a somewhat equal playing field, even though they're not equal, I mean, that's helping us get out of debt. And we have to. If everybody wants to keep sucking us dry, like, we need to still stay afloat, dude. Like, it's crazy. Can you look at the S&P continuous compared to the NASDAQ? Yeah. And then what else? Canada needs someone like Trump. Yeah, they just need someone that's going to be like for your country first. Has nothing to do with anything else other than what's going to make the country prosperous. All these other people, if countries are struggling and the back end data looks like it's about to literally kill us in the next like 5, 10 years, 20 years, like longevity wise, our country won't survive if we keep this shit up. I think it's time for Canada to worry about Canada, America to worry about America, Australia to focus on Australia, the UK, freaking UK, focus on the UK, okay? Stop bringing in problems that you don't need. Stop unfairly doing things and making horrible deals. Like, if what we have isn't manageable, right? With the people we have and the systems we have in place, if they're not manageable, nothing else needs to be added. Things need to start being cut and things need to start being adjusted. So it's your country first. It shouldn't be a hard thing to think about. And it's funny because America's saying America first and then acting like it's America first. Like, okay, now everyone's going to start having to pay their fair share. We're getting attacked. But all these other countries, like, think about this. If tariffs were so bad and if they are like the worst possible thing that everyone's trying to make them be, why in the hell do they have tariffs on us? If they're so bad, why do you have them on us? And why are you getting mad that we're freaking out or making adjustments? Does that make any sense? I mean, it's clearly nefarious. Like, they're taking advantage of us just by the reaction. It's insane. It's the same with other countries too. If you guys are getting ripped off too, it's like, come on now. There's a bearish wick on the weekly 1 month. Let me see. Yeah, that's okay. That's okay if it swept that wick. I don't personally classify that as any significant. I mean, it may end up being the SMT, but without even paying attention to the SMT here on this low, this large range in itself and the idea of power 3, whether that SMT leads to that retracement or not, we already have the assumption that there should be an SMT or a retracement without even having to see this, right? This just makes me feel like this large wick is a reason why this will not fill in the whole fair value gap. Because guess what? This should end up being a balanced price range. Right? Take this high of this wick, drag that over. Right? We shouldn't have too deep of a retracement in there. The consequent encroachment of this wick should potentially be the line in the sand. Obviously, it's okay if it does want to dig deeper. Preferably, I would prefer to continue to see it stay extremely weak, because guess what? That just confirms and continues for us to amplify the sell side interest and not pick bottoms. You know, so think about this too. SMT, if we're bearish and SMT is present on the lows, basically like a bullish SMT, for example. For one, obviously, you want to make sure you're looking at what the DXY shows and what the bonds and yields are showing, because that's going to help justify whether that's even something worth watching in terms of a large response. Like against in this case, the downtrend, if there's bullish SMT, you want to use those other assets to support the SMT turning around, right? With the bonds and yields and then the DXY. And then, of course, if you see an SMT like this, and we're in a clear downtrend and nothing's changed, that's just a point in time where, you know, especially if there's a higher time frame PD array, like an order block, for example, where the SMT is forming in a downtrend, that is just further evidence that there is more than likely going to be a retracement taking place. So that in terms of timing, for you to get back in line with the short, it's not the most ideal time to do that and start pressing it in right when the week starts. It's just it gives you a reason to wait. Like, okay, there's SMT there. There's a PD array right here that may look to, you know, pull price back. There's this large wick. Okay, so let's start the week and feel out how Sunday and Monday presents itself. Is it going to retrace back into those levels? And then if it, of course, does, and it refuses to come back any deeper and just starts to decline, you're now in line with the overall direction, and you waited for the manipulation. Now you can be part of the expansion if it all stays intact. And then it'll attack the SMT. Most times, like the one that left the higher low, in this case it's the NASDAQ, right? If it keeps that intact, right, and say we open up and do retrace on both the S&P and the NASDAQ, like say it leaves this, and then maybe eventually starts to try to race towards it, that's going to act in a low resistance fashion, right? But because the S&P took the low already, right? Because the S&P kind of swept the low already, it may be a more high resistance delivery and a slower, more lethargic delivery through the lows, right? That could be what takes place given this being present in the S&P. The S&P already kind of took it out. But yeah. But then, of course, there's also the fact that the S&P did create the low, right, being taken versus the NASDAQ that left it. So maybe that's also showing us the fact that, you know, maybe it's going to have the harder time getting down. I don't believe that's the case just because of the overlapping scenario being the fact that there's so many equal lows down here, right? This failure swing here, if it does want to go down there, it's going to smash through that in low resistance fashion because it has not swept that low out. It left it, right? So it's if it's going to continue to drop here against the SMT because it left that low, and it's not going to be a bullish SMT that's meaningful, because that's the case, it will blow this out probably easier than the S&P, which took out the low, because we've already done work here, right? So if it's going to continue to be bearish in this regard, this already has done work, so it's probably going to have a little bit harder time getting down there because work's already been done. And Sufi, God bless you, brother. Appreciate you hopping on. Glad you hopped on for the live, and we will be live in the private community later on after the call. Here, I just wanted to make sure I spend a little more time with you guys, see if we can get through some other topics. So yeah, I hope that answered your questions, brother. I hope that answered your questions, Fritz. Appreciate the question. Appreciate how active you've been this morning, and all the questions you've asked, and everybody else as well. Tony, Sufi just left, but Sufi too. This is an open forum for you guys to ask questions. Any of you guys that have questions. So just keep that in mind always. Because it's for you guys. You know what I mean? It's not for me to hear myself talk. Quite frankly, I don't even rewatch any of the videos that I produce. You know, I don't even, because I know what I'm doing. I don't have to go back and re-look at things. I'm not a perfectionist. My videos don't got to be perfect. I don't got to go back and cut things out and worry about this or worry about that. I could care less. You know, it's just straight value, and you're going to do what you're going to do with it. You know what I mean? And sometimes I go and review just to see what I said, compare with my notes, and then make sure I didn't leave anything out from the video, transferring to my notes. But yeah, guys, I think I've pretty much talked about everything I wanted to talk about. We got through every single market. Finally made it, right? Another long one. But we talked about a lot of very important things. Some stuff I've never talked about before. And of course, things that are happening right now in the world, how that should be looked at. Mind you, you don't have to be like some political guru obsessed over what the next news headline is, worrying about things all the time. As a result, if you're a trader, you want to be able to know what's happening in the news. At least the headlines. You don't even got to know the details. But, you know, some details when it comes to the economy are very important, like what we talked about today, because that'll have a direct impact in the marketplace. Some headlines are used to manipulate price delivery. You know, some news goes against what price delivery is showing us. And you visually see the dance that takes place between, you know, the media and their lies and how that is affecting the market. Sometimes you'll see the markets take place and do some crazy, chaotic nonsense, and then news headlines will come out the next day or two saying this or saying that is about to occur, and the market could be a forward-looking indicator, you know, forward-looking mechanism, because that's what it is. It tells the future. It predicts. It likes to predict certain scenarios. So, you know, it's a good thing to add to your arsenal of analysis concepts, sentiment analysis, where you observe, at least at a baseline level, you know, what news is taking place, what headlines are taking place, and what's happening in the world, and how that will affect you and the asset you're trading. You know, just add that on, right? Like a little cherry on top, right? But yeah, guys, with that being said, if you don't have any questions, pretty much got through everything I wanted to get to, and I hope everything has made sense. And of course, if you guys got questions, let me know. And definitely, if you haven't already, definitely like the video, subscribe to the channel. I do have a private community if you guys want access to that. That option is always open, whether you do join or not. Obviously, it's your own choice, your own decision. I don't push to try to sell people, but if you do find value here in the content we provide, and you want more long-term, like somewhat hand-holding, I guess you could call it, because we're live every single day type of experience, again, that's definitely an option available for those that want that. But of course, if you guys just stick here in my YouTube family, I'm more than happy to have you do that as well. It's just my students are the ones that made me or recommended that I have a paid group, because they know the value. They know that, you know, I used to share this stuff for free and people would just take advantage of it, complain about it. So to weed out the ones that aren't serious, obviously there's a paywall. So simply that's what it is. I keep it very exclusive. You know, I make sure that students are a good fit. If they turn out to not be a good fit, they get refunded their money and booted out of the community, because we don't got no time for that over there with the serious people that we have there. So if you are a serious individual and you find value in the content we provide, and you feel like you could also add to the conversation with your experience or your struggles, or maybe you just want to be around like-minded individuals that want what's best for you in terms of trading and have value to provide you that works, obviously you can take that route as well. And if you have questions about that, let me know in my DMs, and we could have a conversation back and forth, see if it's a good fit. But yeah, other than that, you guys, definitely hop on Tuesday. We're going to have a live call then as well. Starting on like the 27th of this month, I may start adding one more live session for YouTube. I'm still contemplating, trying to figure out if that would be reasonable given the schedule with my private community. Maybe I could fit it in somewhere else that's reasonable. Because again, I want to provide you guys as much value as I can, and I'm always trying to look for ways to do that. So that's something in the near future that I'm considering, and I hope that would be beneficial to you guys if and when that does take place. So yeah. But again, guys, thank you for hopping on. God bless you. Let me know if you have any questions. I'm always here to help. And with that being said, I will catch you all on the next one.